this question's right here. Sit up to me. Oh, hi, how are you? Thanks. All the commissioners that are here. Hi, Jerry. All the commissioners can sit right here. And Jerry, this is good. Yeah, I'll sit here, but each one will make comments. This is here too. So, yes. Right. Yes, I do know. So I don't know how many other members are going to come. And have you heard about yesterday's hearing at all?
No, he said he testified.
About cities they give us the information ahead of time. Our staff worked until 2 or 3 days ahead of time putting this stuff together. And there's nothing we voted on, there's nothing we talked about that we didn't have in front of us. Now, it might have got there a day or two. Right. You wish it would have been a week ahead of time. But this was a strong process.
We also never knew what population inflation figures they were using, despite I asked them.
But I have asked you just don't let traction and then say the process.
No, that is the process.
That's how they heard last night. So last thing they heard yesterday was
You and Rebecca and I, we're going to have dinner. Don't worry.
She was concerned about the regressing. She was concerned about issues that affect her constituency.
Because each one will make their own comments. I just want
that'd be a good spot.
Well,
Yeah, but then she ended up not signing it. So.
Well, it was never really on board.
But you were, I mean, you did a great thing. I mean, I understand the big benefit to everybody.
Right.
I mean, it's just but it's advancing the discussion.
Right. Yeah. We call them former members of the San Diego Chamber.
Yes, I heard about that. I saw it on the website. I will say in the introduction that each commissioner had their own points of view. They might have written all by themselves a different set of different rapport, but all of the people at this table came together.
No, I doubt it.
Did Kogan and Boskin testify?
No, they haven't been able to.
Well, did you submit the Wall Street Journal article?
I may get some support, maybe not from this committee.
Do you know this Chuck DeLore?
Yeah,
What area does he represent?
Newport Beach.
Newport Beach.
What taxes is he worried about? I mean, it sounds
What did he say?
so right wing.
Oh,
Just spit it out.
Yeah,
We don't talk right wing or left wing here.
No, I'm not saying it here.
yeah, wingless.
He sounded a little wingless.
They call that a spiral.
What did he say? Where did I put it? Oh, here. Oh, it wasn't him. It wasn't him. It was Runner.
Oh,
That,
no, I know. It's ridiculous.
he said further taxation. We're reducing the personal taxes 30%.
Yeah, Chris is here. Okay, that'd be good.
Gary, Chris supposed to be here.
At least it's on the way to top.
Oh, is that where you're headed?
No, finally.
Yeah.
No, Jim's here.
I found a typo, Mr. Chairman.
Would you repent this thing?
In the appendix.
Yes, exactly.
Heard about you.
Somehow,
Didn't you explode? Tell you a story about
So we have two legislators.
Chuck came late. He was flying.
because it was the day of the vice president. And I said, there'll be a press in town taking it. They lock it out. And we argued. I told him, no, you can't even use the building then. Forget it. You're not putting a Confederate flag. So at the end of the day, they
photoshopped it in.
whatever that
Yes, right.
term
The
is,
high-
their
right, the
computer
Hollywood version
graphic.
of it.
So it's a so you will see this one deal, this Confederate battle using this as the capital, and you'll recognize the state capital. And it's got a Confederate flag flying. And I will guarantee it was never actually there.
In honor of the Tennessee boy.
Exactly. No, I mean, of course, guys like me get criticized for everything on that side.
Yes, exactly.
So if there's any potential slight, I would.
You've always said you're a good old boy.
Yeah, exactly. Yeah, let the record reflect. But those are things you never. I mean, big deal. You know, let them do the filming here, and
Another one.
So, Maria woke up about 3 in the morning, and she was doing her BlackBerry, and she saw this email alert that Obama had won the Nobel Prize, and she thought it was a hoax. So she. So then I woke up.
Okay, this committee hearing shall come to order. I want to say good morning to everybody and welcome you all to day 2 of the committee revenue and tax informational hearing on tax recommendations of the Commission of the 21st Century. By saying day 2, I don't mean to suggest that this is going to go on until we get a decision one way or the other. I want to thank everyone here today, and particularly those witnesses that will testify for being here. and taking the time to be here. As we learned yesterday, the Commission's report was intended as a starting point for legislative and public review of how to reform California's tax system. Yesterday's and today's hearing represents the first step in that legislative review of the Commission's recommendations. Our hearing today will focus primarily on the Commissioners, giving them an opportunity to explain their thinking process or certainly to make any statement they wish to make to the committee. We'll follow up with the third day of hearings on Wednesday, October 14th. There we will solicit input on the Commission's recommendations from leading academic experts in tax and economic policy. All right, with that, I would like to offer Ms. Harkey an opportunity to make a statement on behalf of my colleagues, on behalf of Mr. DeVore, who's the Vice Chair of the committee.
Thank you, Mr. Chair. I just want to welcome you all. We heard extensive testimony yesterday, and I'm not going to take up a lot of your time because we did run way over, and I'd like to allow you the fresh opportunity to speak rather than waiting. So welcome. Thank you very much for your work. I find it very interesting, and I have learned a lot about the tax code through this. So thank you so very much, and I appreciate you taking the time to come and offering your input personally. Thank you.
Well, today we are absolutely, I think, pleased and honored to have members of the Commission on the 21st Century actually here to talk to this committee and to the legislature and to give their perspectives and any thoughts that might help us ultimately to arrive at a way for California to stabilize its revenue source and also by keeping it able to provide services that are so much needed by so many Californians. I want to read the biography of each commission member here because I'm very grateful for their contribution. I think California owes this commission a debt of gratitude. It is the highest exercise of democracy that all of you have given of your time because your government asked you. And certainly you have many other things to do, including providing for your own families. And you've spent hundreds of hours in this process and what had to be a gut-wrenching process ultimately to come to some kind of consensus. And I also want to let you know that even you have intended this report to be a starting point for discussion, and so we may the legislature may go there, that may not. Members have questions, but sometimes we feel under the gun asking the questions, and they can be pretty short. But that isn't to suggest any disrespect to any of you. You've lived with it for a while, and we're still trying to get an understanding. Well, that having been said, I did receive an email from Edward De La Rosa, who said he could not be here today, but he asked me to read a statement into the record. And these two paragraphs? All right.
Write what you want.
Let me start with this.
He wants this as well, Brad?
Yes. He wants
The entire letter?
Yes. He wants 2 paragraphs. from the entire letter.
We would welcome having it incorporated in the record as a whole, however you want to do it.
Well, what I'll do is I'll read his formal statement, and then I think you can get a sense of his position by reading the first statement of each of 4 paragraphs. I support the Commission's transmittal of this plan to the Governor and Legislature as a way to begin serious debate about a reconfiguration of California's tax structure. My statement of support for transmittal is not, therefore, a statement of support for this particular plan. Rather, it serves as my support for the Commission to forward this document to serve as a starting point for serious discussions about the elements of this and other tax packages, their benefits and drawbacks. As a condition of my support for transmittal, I have attached my statement of concerns as well as some ways to address those concerns. I have considered it a privilege to serve on this commission under the leadership of our chairman and as a colleague of my fellow commissioners. I trust that the work of the Commission represents an excellent starting point for California's efforts to build a tax structure that supports our state's continued prosperity in the 21st century. And then in terms of his list of concerns, I'm going to read the first sentence of each paragraph because I think it pretty much states his point. Number one, I believe there is a risk that the package, if adopted, will result in a transfer of our state's tax burden from California's highest to its lowest economic earners. Statement number two, paragraph 2. I remain unconvinced that this is a good idea to eliminate, I remain unconvinced that it's a good idea to eliminate the current corporate tax and replace it with a BNRT. Third paragraph. The operation and phasing included in the current package pays for any underperformance by the BNRT with a delay in a reduction in the sales tax, but I'm concerned that a reduction in our state's very regressive sales tax could be delayed if the BNRT generates less revenue than expected. And paragraph 4, the current plan does not enable employers to deduct the cost of employer-paid health care premiums. And then he goes on to make suggestions about how those concerns might be addressed. Without objection, I will include this as part of the permanent record of these proceedings. And now, with our commissioners, I want everyone to know we have a very prestigious group, accomplished in their own right, and I think some of the best minds working on this issue. Starting with Commissioner. Well, actually, I know her as Senator Rebecca Morgan. We served together in the legislature for many years. She's from Los Altos Hills. She founded the Morgan Family Foundation in 1993 that has served as president since '99. Prior to that, she served as president and chief executive officer of Joint Venture, Silicon Valley
Silicon Valley. Period. That's a colon.
Silicon Valley from 93 to 98. Okay. So we can't read. And was California state senator from 84 to 93. From 1980 to 84, Morgan served as a supervisor on the Santa Clara County Board of Supervisors, and from 78 to 80, she was assistant vice president at Bank of America. She was a teacher from 1960 to 1962. Forgive me for my lack of reading skills. Yes.
Yeah, I just would like to add, because her work in the Silicon Valley and in Santa Clara County was much more than is cited there. The joint venture Silicon Valley was an exceptional effort that she led that brought together the major CEOs from the technology industry together with school superintendents and other educators to look at how we could improve the academic achievement, particularly in math and science of primarily underrepresented students in Santa Clara County. She also did some exceptional work with her foundation and funding some special projects. So she's just been very, very special. And I know that I read the biography, and I just wanted to add that to it. And thank you for all your outstanding work on behalf of Santa Clara County and the state, Senator.
Thank you, Jim.
And I apologize. I read joint venture as a generic term as opposed to the name of an organization. What do I know? I'm from East Los Angeles. Commissioner Gerald Parsky, we shared his resume with you yesterday. Commissioner Kurt Pringle, his being Republican, myself being Democrat, he always reminds me that his first vote after getting elected, first vote for Speaker after getting elected.
The first word I said on the Assembly floor
was aye for Calderon for Speaker. And then he went on to become the Speaker of the Assembly. He has served as mayor of the city of Anaheim since '02 and as president of Kurt Pringle and Associates since '99. Additionally, he has served as an adjunct faculty member in the Political Science Department at the University of California, Irvine since 2000. Mr. Pringle served as a California State Assembly member from 88 to 90 and from 92 to 98 and served as Speaker of the Assembly in 96. He currently serves on the California High-Speed Rail Authority and served on the Public Employee Post-Employment Benefits Commission from 07 to 08. Mr. Pringle earned a master's degree in public administration and a bachelor's of science degree in business administration from California State University in Long Beach. Commissioner Christopher Edley, Jr. has served as Dean and Professor of Law for the Bolt Hall School of Law since 04. Prior to that, he was a professor at Harvard University for 23 years. He served President Clinton as a consultant to the President's Advisory Board on the Race Initiative in 97 and a special counsel to the President directing the White House review of affirmative action in 95. From 93 to 95, Mr. Edley worked as the Associate Director for Economics and Government at the White House Office of Management and Budget, and in 92, he served as a Senior Advisor on Economic Policy for President Bill Clinton's transition team. Mr. Edley served as the National Issues Director for the Dukakis presidential campaign from 87 to 88 and was the Assistant Director of the White House Domestic Policy Staff for President Carter. He earned his Juris Doctor degree and Master's in Public Policy degree from Harvard University and a Bachelor's of Arts degree from Swarthmore College. And finally, but certainly not least, Mr. Ruben Barales of Del Mar has served as President and Chief Executive Officer for the San Diego Regional Chamber of Commerce since 06. He previously served as a Deputy Assistant to President George W. Bush from 01 to 06, where he was the President's liaison to state and local elected officials. From 98 to 01, Mr. Barales was President and Chief Executive Officer of Joint Venture, Silicon Valley, a coalition of business, government, and civic groups. See, I needed that extra sentence.
Second time around's a charm.
Prior to that, he served on the San Mateo County Board of Supervisors from 93 to 98. Mr. Barales is a member of the Public Policy Institute of California Board of Directors and a past member of the California Speakers Commission on State and Local Government Finance and the California Commission on Local Governance for the 21st century. As you can see, it's a very distinguished group of Californians. And with that, maybe we can just start in the same order.
I'd just make a couple of comments just to begin, Mr. Chairman. First of all, I want to thank again each commissioner for the work that they put in. The people around this table gave up an extraordinary amount of time. And to set the framework a little bit, and I'll be happy to come back around after each commissioner comments, but I think I made quite clear in the transmittal letter on the report that the commissioners that came together to move the report forward did so with the clear understanding that they had their own personal views with respect to various elements of the proposal. And I'm sure that all of you that have dealt with the process of bringing people together to support legislation understand that if any individual was given the total authority to write everything, they might do it a little different way. I'm sure that you will hear, which is very appropriate, from individual commissioners today expressing their views just the same way that Edward De La Rosa did in his transmittal letter, and the way in which I gather Fred Keeley and Jennifer Ito did yesterday, even though those two couldn't bring themselves to actually support moving the report forward. That's when you're dealing with a subject as complex, as difficult as this is, I think that's to be expected. The only thing I'd like to repeat again for all of you that are focusing on this is that, at least from my perspective, this is an extremely important issue to the future of California. And doing nothing at this point in time shouldn't be an alternative. I think I laid out at least the goals that we were asked to address. I think they're very good goals. I would strongly urge the legislature to keep those goals in mind as you look at this package of recommendations or as you look at alternatives that you might want to pursue. But measure each of those alternatives against similar goals, because those are goals that really will set the state on the right course from the standpoint of the tax system. With that, I'd just like each of the commissioners, if it's all right, to give their own views, and then all of us individually will be happy to try to respond to questions. Kurt, you want to start us off, or Becky, either one?
Right. What I want to do is give each commissioner a chance to make a statement.
Absolutely.
And then the committee will have, I'm sure, lots of questions. And so, Ms. Senator Morgan.
Thank you, Mr. Calderon, Senator, and I appreciate the opportunity to speak here today. I served on the commission as a layperson, but I have to say I didn't totally take off my hat as former senator in Silicon Valley, and went back and held some hearings and talked to people individually, and certainly the tax committee of the Silicon Valley Leadership Group, which are company folks, and then a dinner with vice presidents and chief financial officers of companies in Silicon Valley provided guidance. Feels a little deja vu since I was here on the Rev and Tax Committee in 1987 when we did what we could to conform to the federal changes of '86. But I think of all of the charges, six charges in the executive order, the one that I heard the most about, particularly from individuals, was simplify. We are tired of the complexity of our tax code. And certainly our staff for the commission proposed many alternatives, and we came up with what is before you in the majority. And I signed the cover letter with Chairman Parsky because I think what we sent and the recommendations that are there, I knew wouldn't survive 100%. And that you would be holding hearings, you would be vetting the process, because you must review, analyze, and decide. And that's a tough process. And so what we went through, you now have that opportunity to consider. So I want to make a few comments in sequence of the sections in your report. First, the personal income tax. I liked it in our recommendations because it does simplify. Taxpayers will like it, because they can fill in their tax forms in one page rather than many, many pages. They could even, if they don't deduct, do it on a postcard size, but they'll probably want to put it in an envelope anyway. We felt that 55% of California's revenues coming from the personal income tax was too much. And one of the goals that Chairman Parsky laid out was that we reduce that percentage. And that's one of the things that this proposal will do. I think having two rates is positive. Again, it adds to simplicity, and it will also particularly help the low income. Under the proposal, where people that don't deduct can do a flat deduction of $22,500 for an individual and $45,000 for a couple, means that a couple could earn up to $101,000 and only pay 2.75%. $101,000 minus 45, and anywhere between up to $56,000, they pay 2.75. So anybody below $101,000 down to the $45,000, which gets them to zero, I think is a pretty good deal. I'll review the math later if you want, but that's how I figured it, and I had confirmation from Mark Eibel, so hopefully I'm right. Depending on your source of information, California is either the first or the second highest tax rates and high tax income of all states, all 50 states. And the Center for the Continuing Study of the California Economy out of Palo Alto reports that in the 20 years from 1988 to 2008, personal income grew 181%, which is good, but personal income taxes paid grew 319%. We felt I think it's time to bring that into balance so that the growth isn't almost double, 80% more than what people are earning. So I think this proposal for the personal income tax, it reduces rates for everybody, it reduces the time to file, and it reduces the cost of filing. And I think our taxpayers will like it. As far as the business net receipts tax, I'm very open to doing away with the corporate tax, which again is very complex. And I'm also concerned about the fact that California is taxing businesses more than every country in Europe. The European Council countries are a minimum of 5 percentage points lower than California. I know many people would like to broaden the sales tax, but I think you all know what happened in Florida and Michigan when that was tried, and so our commission chose not to do that. One of the things that is important to me in the business net receipts tax is that you continue the research and development tax credit that's been in place for many, many years. And I've checked with the business people in Silicon Valley, and there are 2 studies that I can cite if anybody wants them, but the lowest amount that anybody suggested was that for $1 of tax credit, you get at least $1 of revenue, and therefore the ability to hire more people, which is one of the things that we want to do. I would make a suggestion to the committee and staff, and that is, as you review this tax, that you take a 10-year retrospective, that you have staff look at the 10 years, say from 1997 to 2007, and see what the average revenue from corporations would have been, and what tax rate would be required to be revenue neutral. I think my understanding was, and staff or Chairman Parsky can correct me if I'm wrong, but many of our projections were based on 2007 revenues, and that was a pretty good year. And so I think an average would be a 10-year retrospective average would be a better way to determine the appropriate rate.
I learned quickly not to correct Becky too often, so there's no correction needed.
I didn't interrupt.
The second suggestion I would make as you review this recommendation, is that you make sure you know the population and inflation projections that are being used from 2012 to 2017 to come up with that revenue neutrality, because that's the recommendation, that it be based on prior year expenditures plus growth in population and inflation. And as elected officials, I think you need to be confident that those are good statistics. And I know many of our commissioners, including myself, believe that a 4% business net receipts tax should be the maximum, and balance it off with a sales tax otherwise. On Section 2 with your rainy day fund, I support it with tighter guidelines for any removal from the fund. And I warned Chairman Parsky I was going to say this, so he's not surprised. I think the title Rainy Day Fund is pretty pedantic, pretty colloquial. I mean, I have a rainy day fund for surprise wedding presents or birthday presents. In 1985, I authored SB 1465, so it's a little bit personal, that set up the Reserve for Economic Uncertainties. That was sponsored by the Legislative Analyst's Office, and it was supported by then Speaker Jesse Unruh, much to my surprise. And we did get it passed. I think that it's a more elegant title than Rainy Day Fund, and it is in fact addressing what we're supposed to address, economic volatility. With this reserve fund, you have funds in a downturn. I support the Tax Appeals Tribunal because I think it's a conflict of interest to have taxpayers have to go before the federal tax board members, which currently make up that appeal process. And I would like to suggest, which is in Section 3 of your report, that you could save the money that's needed to set up the tribunal by merging Federal Franchise Tax Board and Board of Equalization. One of the things that Michael Boskin and I forget, Jerry, who the other supporters were. I know we had to have a minimum of 3. I'm of the opinion, having served on a county board of supervisors and watched nonprofit organizations decide whether or not to charge a fee or whether to charge a fee, that people really feel like they have a stake in this organization or a stake in the state if they pay something. Now, I was challenged on a minimum fee, minimum tax, by saying, but people already pay sales tax. My feeling is that when the tax is integrated in with what we buy, it's not as noticeable. But come April 15th, if every individual, even when they didn't owe, based on our deductions, paid $50 or $100, and the small businesses paid $250, they know they're paying it, and they have a stake in the operation of the state. And I just think that that is something that, it's something I would like to see happen. Let's put it that way. So what you have before you would be taking a risk. I'm a risk taker, and I think it pays off many times. The state is in deep trouble, and I ask you to take perhaps what you consider a risk and have a new start.
Did you want questions now or wait till everyone?
What I wanted to do is I wanted to allow all the commissioners to make their statement. I know it takes great restraint. I want to interrupt as well and ask questions. But what I would suggest is, what I do is I will note who the speaker is. At the top, I'll draw a line down the middle of the page. When they make a point, I'll have some short reference to that and then a short reference to the question that it raises. And then that way it'll remind you who to come back to and what your question was at the time, what issue you want to raise. Thank you, Senator Morgan. Mayor Bingham.
Very good. Thank you, Mr. Chairman and committee members. I too like being back in this room. I served on revenue and taxation for about 4 of my 8 years, and Julia assisted in some of those. So I don't want to harm you and your reputation, so I won't go into further detail. Meaning having to work with me. But I really do want to start at the starting place, and that is in this committee, and the purpose of this committee is to hear so many of the bills that come up to modify a tax system. That is what you spend years doing in the Revenue and Taxation Committee. You are looking at an existing tax structure and you are tweaking it, you're modifying it. That was not our charge. Our charge was to address the bigger issues that oftentimes don't get brought before the legislature, that oftentimes can't be a part of the legislature, and you all know once they are presented to the legislature, you have a bunch of folks swooping in to pick that apart. Our job was to look at the big picture and to look at it based upon some structural elements to the state, and Senator Morgan pointed them out, but I want to focus on one that's very important because you all live with it, and that is the volatility of our revenue structure in the state. It really is the cornerstone of this whole discussion. So if you're unwilling to say that that is significant or that problem needs to be addressed, then not much that we talk about is worth listening to. If you feel, though, that a spiking in revenues during economic good times, as they occurred in 2000 and 2001, where you had capital gains under a personal income tax that spiked up over $10 billion than what was collected the previous year for the same purpose, and then plummeted 2 years later, and that $10 billion disappeared, yet you built within the base of services that were to be provided here. This budget of the state is built on providing services, And you can no longer live by that commitment to provide those services because of the plummet of revenues going back to a normal time, let alone to what you all have had to face over the last couple years, where you have faced some dramatic revenue reductions. For example, when you passed a budget that addressed last year's budget, when it was approved on July 1st, the revenue projections for personal income tax were wrong by 19% within 6 months. So the most volatile aspects of this budget hurt people. That's why the Speaker and the President Pro Tem and the Governor all said, here's an executive order, you commission, you sit down and address some of these critical aspects. And the most important, in my opinion, is the volatility of tax revenues. So if people are willing to accept that, then we'll have a good discussion. If you're unwilling to accept that that's a problem, or that we don't even need to discuss it, or we don't need to see it from the macro level, then there's no need to have the discussion. But if we have the discussion that that is a critical element to state budgeting, commitment to people for services, or a way for a state to operate under any circumstances, then in fact you have to look at that as a starting point. And in the big report you have, turning to page 11, is really a very instructional page, because it says this is where our revenues come from. You've all seen this chart, so you don't necessarily need to turn to page 11, but it says that 54% of the revenues to the state come from personal income tax. It also says 31% come from sales tax, and a smaller percentage, 10%, come from corporate income tax. So yes, 5% come from other. We didn't deal with that. We didn't look at the insignificant taxes that may lie around the edges. We had to deal with the big three. And in dealing with the big three, we did. Our Department of Finance and others looked at which of those big three are really volatile. And the most volatile of those is personal income tax. We're most reliant upon it, and it is the most volatile tax of the big three we collect. So as a starting point, we can't ignore the percentage of our budget that comes from personal income tax. And so even though there may be folks that say, well, we like the people that are getting taxed, or we like the combination of folks that contribute to personal income tax, the bottom line, if you want to address volatility, you have to address personal income tax. And you have to address it not just by reshuffling the brackets, but you have to address it as a percentage contributor to the overall general fund. And if you're unwilling to address that, then fundamentally you can't address some of the burdens and challenges of a volatile system. So, and similarly, sales tax is the second most volatile element within that category. Nowhere near as volatile as personal income tax, but volatile nonetheless, and more so than corporate income tax. So I just want to share with you why we looked at each of these taxes and what were the outcome that is depicted within the report. One, we did focus on personal income tax, and again, if I wrote this the way I wanted it, it would be a different report. I understand it may be slightly different than if Mr. Edley wrote it the way he wanted to write it. We didn't operate on a one-person filing a letter or a statement. We worked as a commission trying to build consensus that was broader than any individual's single perspective. We also worked as a commission that didn't look at a company-by-company winners and losers designation. We didn't look as a industry-by-industry, who are the winners, who are the losers recommendation. We looked at, from our perspective, what would be the best combination of tax restructuring to benefit the state. That was what our job was. So there'll be plenty of companies that say our taxes would go up under this. The personal income tax payers and others that will probably have their taxes go down don't know anything about this plan, and they're not going to show up in a cavalcade of presentations to share with you their point of view. They're at home working on family issues. But the point of the matter is you'll hear from the people who have done the individual company-by-company, industry-by-industry analysis, and they'll share that perspective. That wasn't our job. Our job was to look at the structure of our system and what can we present to you as changing that structure to address that core issue of volatility. So yes, personal income tax is a big element. You know what we did. We took the 6 brackets, reduced them to 2. Every single personal income taxpayer, as they stand today, would have a reduction in their personal income tax. You don't think so? All right, we'll talk about that later. But that is what we have felt as a part of this presentation. And in so doing, it reduces personal income tax by $14 billion. So taking $14 billion out of the general fund revenues. Yes, it's very progressive, our state personal income tax. So yes, the people who pay the most are going to receive the biggest benefit. But similarly, we looked at sales tax, which is the most regressive tax of those big 3 that we looked at, and we cut all of it. We eliminated all of it, all 5 cents that contribute to the general fund. We didn't get into the citizen-initiated initiative portions or things that were designated for other purposes by the voters. We looked at the 5 cents that the legislature established that goes to the general fund, and the sales tax being the most regressive of all the taxes, we eliminated all of it. That's a $27 billion reduction from the state's general fund coming from the sales tax component. And then the corporate income tax element, we felt the only way we're going to make up the difference is create some type of broad-based business tax. So we should be very careful about taxing businesses twice. So eliminate the corporate income tax and put create another broad-based business tax that addressed all businesses across the board. That was kind of the strategy on how to put all these pieces together, and eliminating the corporate income tax is about $12 billion. The business net receipts tax was what was created. There'll be plenty of folks. There won't be that many people to argue from the business community particularly about the reduction in the other 3. There'll be plenty that argue about the increase in the 1. But the increase in the 1 fills the hole under this theory we all worked under, which is this package has to be revenue neutral. I know some members early and late, one member, Mr. Keeley specifically pointed out he didn't think our job should be revenue neutrality, but we all felt it should be. We didn't feel our job should be to come and propose how to raise taxes. We didn't feel we should come before you and tell you how to cut taxes. We came before you with the sincere interest to try to have a revenue-neutral package, so what we were going to propose would, within a 5-year business cycle, be relatively the same amount of money collected to the state than would have been collected under the other systems. That we operated under that assessment, and that is why the phase-in is built the way it is, so that if, in fact, we're wrong on what is being collected or what's being cut, you can modify it every step of the way along the process. 2 things I would like to add, and of course I'll hang around to answer some questions. One of the easy things that people want to point to is why didn't you just extend sales tax to services? Okay? All of you know why, but I'll share with you my perspective. Yes, 1, it moves the direct charge to the consumer immediately, unlike a business net receipts that will move through that company's cost of product and in most cases will move to the consumer, but a sales tax moves to the consumer immediately. So the business doesn't put it in as a cost of business, so somehow it seems like it's not a business tax, so the business groups won't complain about an extension of a sales tax to services. But the challenge with that is really twofold. 1, imposing a sales tax to services, the question I'd have of you is why hasn't that been done already? Because when it's proposed, there is a battle, and it's a service-by-service battle. And if you look at a chart that shows every single state in this country with different sales taxes onto services, they're all different. I don't believe there's a single one, other than those that don't charge any to services, that have the same set of list of services where they charge sales tax. Why? Because every one of those entities comes and fights you, beats you up, or goes to the voters to try to exempt themselves from the sales tax of services. Do you not think there'll be a few lawyers to show up the extension of sales tax to legal services, or a few realtors when you want to put a sales tax onto realty services, or amusement parks or sporting events, or
Scout
accountants.
cookies.
People like me, my family in the dry cleaning business, there's not many advocates that would protect dry cleaners. So a lot of the small folks would pay the sales tax. A lot of the big businesses and big industry, where the bulk of the sales tax on services would be generated, would work very hard and beat all of you up to exempt them. So there needs to be a way in which you, and I directly apologize to the chair for mentioning lawyers publicly, but in fact, there has to be a way that the system can be implemented. And that brings me to the second challenge with sales tax extension to services. Right now, under a city's collection for sales tax, there's a definition under Bradley Burns that the 1% that cities charge is for the sales of goods. So you would need to modify Bradley Burns. You'd fall under a 218 challenge for every single city in the state. Every city council would have to vote, and every collection of city voters would have to vote to extend that 1 cent that cities charge for sales tax to match up what the state would charge. Similarly, every self-help county and every established measure that self-help counties have for transportation would equally have to go before the voters to extend it to services. But what would happen if they didn't, or the voters rejected it? Well, what would happen is if I went to Pep Boys in Garden Grove and bought a set of tires and had them put onto my car, I would be paying two separate sales tax rates. One, which is the full cost for the purchase of the tires. Another would be a different cost if my local government did not adopt a certain portion of the sales tax. But that Pep Boys wouldn't just have to keep it separated that way. Every other Pep Boys in Southern California could have different sales tax rates for the sale of goods and services within that single business all throughout every one of their stores within their service area.
But otherwise, it's a great idea.
It's a great idea.
We want you to work diligently on this idea.
I'm really glad you left the legislating.
So part of it was really to focus on what is doable. And when we presented a business net receipts, it was based upon the foundation that the broadest possible base of taxpayers and the lowest possible rate with a degree of simplicity is an important element. And that's why we settled on a business net receipts. And my final comment would be, it is interesting, even if today you all said this is wonderful, we want to pass your package just the way it is, that's not the end of the story. Every single year I was in the legislature, I carried a tax conformity bill, I carried a tax modification bill. The purpose of this committee is to hear modifications and issues relating to tax policy. The bottom line is, wherever you see the outcome, someone will complain about one element, how it may not be fair or proper, and that's what the legislature does. It addresses those things, it makes those modifications, and as the president of the Chamber of Commerce said, don't rush into changing a 70-year-old tax system. Well, we've changed a 70-year-old tax system every single year. And if there is some way tomorrow there's a new tax system, you will be charged with every year making modifications and correcting problems within it. So it's interesting to see that this whole fear of something new means we're going to be stuck and never be able to correct or retract from it. And that's why we proposed a 5-year phase-in, so that you could catch and modify and ensure that it's a proper system for the state. Thank you.
That was an interesting discourse, but a learned one and experienced, to be sure. Okay, I'm going to come back. I want to come back to everybody, but I don't want to interfere with your ability to express your thoughts. Mr. Edley, Professor Edley, Dean Edley, what is it?
All of the above.
It's President Edley, isn't it? I don't know.
That's it. Thank you, Mr. Chair and members of the committee, and I want to associate myself with the surprisingly insightful remarks of Mr. Pringle. That was every single word. That was great. So I think I can be brief. Three points. And I come before you, I think, as my colleagues have heard me say, I consider myself not just a Democrat, not just a liberal Democrat, but a paleo-liberal Democrat. And but I did very self-consciously decide that I would try to serve on this commission in order to get something done, not as a vehicle for pushing my personal agenda about an ideal tax system. This is, in other words, from my perspective, to keep it from being a quixotic waste of time. From my perspective, this was an exercise in the art of the possible and compromise. And I think it's fair to say that there is not a deep political culture of pragmatic compromise in this state at the moment, left, right, or center. But that, frankly, is what we tried to do as a commission, make pragmatic compromises. The revenue neutrality, I think, was important to us for exactly that reason, in hopes of producing something that you could adopt by majority vote rather than two-thirds vote, but also because we didn't want this exercise.
Thank you very much for that.
Yes,
As another Democrat.
yes, exactly. But also because we didn't want to, we didn't actually want our discussion about the structure of the tax code to be confused with a different agenda, which is how much in revenue overall. We thought we'd try to create a structure, which then this legislature or some future legislature could use that same basic structure, but pump up the rates or pump down, deflate the rates to adjust whatever level of revenue. So given the level of revenue, the question is what's the best way, the best achievable way to raise that level of revenue. So that was one constraint. A second constraint from my perspective was with respect to progressivity and the distribution of tax burdens. Now, I, of course, came into this hoping that there would be an opportunity to make the tax system more progressive than it currently is. California's tax system as a whole is relatively progressive in comparison with other states, but it's still not really progressive. It's barely not regressive. Most state tax systems are profoundly regressive. Ours, somewhat less so. The income tax, yes, progressive, but when combined with all the other elements of the tax system, it ain't nothing to write home about in terms of its progressivity. So I came to this hoping that we could make it a little bit more progressive, but very quickly saw that there might be some opposition to that agenda, and that the appropriate thing to do was try to preserve whatever the current progressivity or distribution of tax burdens is in the system as a whole. So that was the second constraint. The third constraint, though, was to do that requires doing something with the personal income tax. Now, as it happens, the modeling that the staff gave us, I just want to emphasize this. Yes, it's true that the high marginal rates at the top end contribute to volatility. But much more of the volatility is created by the aggregate reliance on the personal income tax as a whole. That is to say, if you look at our package, which reduces volatility by about 40%, 42%, most of the reduction in volatility comes from reducing the share of revenues attributable to the income tax, not from reducing the top marginal rates in the income tax. So the progressivity of the personal income tax is not as important to volatility as the share of revenues contributed by the personal income tax, which means that to reduce volatility, you have to have less reliance on the personal income tax. So that's now, my view was, I think it's fair to say, if I can name names, the Republicans on the committee, many of them, wanted to bring down the top
There were
rate.
some?
There were a few, yeah. Wanted to bring down the top rates in the income tax dramatically, maybe even a flat tax. And frankly, I mean, this is not theology for me. I would have been perfectly prepared to go along with reducing the top rates if you let me raise property taxes. In other words, my view was, I'll give rich folks a tax break on their income tax if I can tax their wealth through the property tax. But doesn't take a brain scientist to recognize that putting Prop 13 on the table was a non-starter politically and pragmatically. And again, we wanted to keep your job as simple as possible. So with property taxes and constitutional amendments off the table, then the question became wrestling over in what way to reduce the personal income tax. Now, I think what we have come up with in the proposal are reductions in the personal income tax that maintain the current distribution by income group of tax burden. That is to say, the share of personal income tax revenue generated from each AGI bracket is almost identical before and after these changes. Almost identical before and after these changes. In other words, the overall progressivity of the tax of the PIT does not change, or at least within rounding errors does not change. It is true, this is the very complicated analytical point, it is true that in moving from now to reform, because of the progressivity, if you maintain the same shares of contribution to the personal income tax, but reduce the amount overall of the PIT, people at the top are going to get a larger cash reduction than people at the bottom. So the delta, the change, looks like it has a horribly regressive character, the change. But once you get there to the reform system, the distribution of tax burden by AGI is the same as it was before, or close to the same as it was before. That's arithmetic. If you're not going to change the relative shares, then to get from 55% contribution to overall revenues down to, 35% overall, you're going to be reducing, you're going to be, more of that $14 billion in reduction is going to be coming from reducing the tax bills at the top than reducing the tax bills at the bottom. So now the question is, having done that, if we've maintained the progressivity of the PIT, what about the other changes? Eliminating sales, eliminating corporate, introducing the BNRT. What are the distributional characteristics of that package of changes? And the answer probably is a little bit of loss in progressivity, to be candid. But hard to tell. Hard to tell because economists will battle from now until doomsday over the actual economic incidence of the corporate income tax. It's hard to say who really bears the burden. Consumers, owners of capital, workers, hard to say. Similarly, with the BNRT, a little hard to say. Probably not. The BNRT is probably not quite as regressive as a sales tax. Probably not, but we don't know for sure. So there's uncertainty about exactly what is. We've got to guess. And our guess is that on balance, we think that doing those three changes, sales, corporate, BNRT, probably a wash distributionally or close to it. Okay, period, paragraph. Do more analysis. That may turn out to be wrong. Keep crunching the numbers. It may turn out that there's a slight diminution in the overall progressivity of California's revenue system under our proposal. It's easy to fix. It's easy to fix. In other words, if you accept the goal of trying not to change the overall distribution of tax burdens in the system as a whole, and we missed the mark, it's easy to fix. For example, you could take the PIT rate that we have 6.5% and tweak it up a little bit. And take the revenue that's created by that and either reduce the BNRT rate a little bit to 3.9, 3.8, or spend that revenue by putting in a child care tax credit or expanding the R&D tax credit. Lots of possibilities. So the point I want to make is, without completely remaking the package that we tried to design for you, if it turns out that we haven't hit the sweet spot in terms of its distributional characteristics, it's pretty easy for you to fix. You could add a third rate at $250K of 7%. Take that revenue, reduce the BNRT a little bit. So there are lots of ways, I think, that you could bargain out a way to keep the package revenue neutral, but try to keep the distribution of tax burdens the same today as the same under reform as it is today. With respect to the PIT, I just want to remind you of a factoid. Jerry probably mentioned it yesterday. Many people decry the fact that the top 1% in income contribute 50% of the PIT. Doesn't bother me, but it bothers a lot of people. After our reforms, the same would be true. The top 1% of income taxpayers would continue to pay 50% of the PIT. It's just that the total amount of the PIT would be less. Okay? Okay, second thing I want to say is that there are a few important fixes in my judgment that need to be made. I already mentioned that you could tweak the progressivity to get it right where you want in whatever the political sweet spot is based on the numbers as they develop. There's some things I wish we'd been able to pull off in the committee. The most important example to my mind is the treatment of independent contractors. It is critical conceptually and pragmatically to the BNRT that we try to tax things once and only once, and that we not introduce incentives that skew things against labor in favor of capital or the reverse. Right? One of the biggest risks there, and frankly I think probably just about the only risk, which I hope we'll get a chance to talk about, is that if a business, because a business does not get a deduction for the compensation bill, wages paid, but does get a deduction for services or goods purchased from another business, there's a risk that you hire a worker, no deduction. You hire an independent contractor or a firm that provides workers to you, you get a deduction. Now, let me say something about that. If you hire workers from a firm that provides services, that's really not an issue because that firm is going to pay taxes on the money that you pay, on the money that I pay them to rent their workers. They'll pay taxes. So that's the ones that they're taxed, and I should get a deduction for it because it's already been taxed by that service firm. But an individual contractor who's just paying the personal income tax is not going to pay the BNRT. So if I hire an independent contractor and get a deduction, I haven't paid taxes on that value added from that labor, but neither has the independent contractor because they don't pay a BNRT. So that problem has to be fixed to make an employer agnostic, neutral as between hiring workers versus hiring independent contractors. A straightforward way to do that would be to deny me a deduction for hiring an independent contractor unless the independent contractor proves that they've paid the BNRT. So there is under current law, there is a compliance problem with independent contractors. This is a classic problem under an income tax as well. But what I'm saying is that there are probably 5 different ways to fix this problem of the independent contractor. We could have cooked up one. You can cook up one. Again, it's an important safeguard, but it doesn't require dismantling the entire structure. That's the main thing that I want to leave with you. You can plug that gap without the entire structure. I'll subside, but I just want to reemphasize the fact that over and over and over again, I had to tell myself, I think we had to tell ourselves, that if this package was going to have any chance in the legislature, any chance of moving forward, we had to be willing to take lots of different policy goals, social engineering, redistribution of wealth, improving the environment, stimulating this industry versus that industry. We had to take lots of extrinsic policy goals and say, not on this vehicle. Wait for another day to do that. That's the only way, I think, that you'll be able to pull off something this big and this complicated in this environment. Send me a postcard. Let me know how it works out. And I just want to say, I was amazed this morning to wake up and discover that my former student Barack Obama had won the Nobel Peace Prize, because I just thought Jerry was going to win it for his work on this commission. I was just amazed.
Nah, he didn't deserve it, and he's not going to get any awards from the people who are going to bear this tax.
Mr. Chairman? Thank you. I'm going to say I have 3 points, but I'll ramble on for a little while. I just want to emphasize that for me, it is a package, and the main reason, although with a couple of exceptions, that I could sign on to it is because the Section 2 recommendation includes the creation of a rainy day reserve fund, which, and I know it may not be under your jurisdiction as a committee, but it became very clear that the situation of volatility is not a problem when we have a lot of extra revenue coming in. That's not a problem. Spikes in revenue is not a problem. It's an issue, it's a spending problem as well. And so I think for any true reform, from my perspective, you're going to need to address the issue of, excuse the term, rainy day fund, Becky, but you're going to have a reserve fund, I think, to get support needed. You got to control the spending side. And again, it's the main reason I was able to sign off on the report. I do want to mention that I thought the process was a very good process. You may have heard otherwise yesterday. Chairman Parsky, I think, did an excellent job. If you recall, we were given charge to complete this in about a quarter of a year, and for various reasons that was extended. I am firmly under the belief that
we're having to resolve water in about 3 months.
Right, exactly. So you know the feeling.
So this is sort of the operating modus operandi now in Sacramento.
Yeah, and to truly address a serious issue, something like this, I think would take at least twice as long as the time that we put into it. And I also have to acknowledge staff, Mark Eibel and all the others who put so much time. They put in like 3 years, I think, of time into our 9 months, but they did, I think, a very, very good job. I don't think the process was flawed at all. It was only flawed in as much as any process you go through here, those of us who have been in local government, in the sense that it's just there's never enough time. There is never enough time to be able to fully air things out. You've got to keep moving forward, and you know the drill. Reform obviously is needed, as Kurt mentioned. The economy's changed, and the tax system needs to be changed to accommodate what's happening in California. And I was coming in hoping that maybe there was a win-win solution in terms of reforming our tax system. There's no way. There's a win-loss. There are winners and there are losers, and there's no easy way to get around this, which makes me admire our current tax system that much more, because it doesn't offend anybody to just nibble away at the corners of it or at the sides. But I think there was consensus on the fact that a broadened tax base is important, so we need to broaden the tax base in California. It's becoming, because of the way our economy is growing, the tax base is narrowing, so we need to broaden the tax base and lower the rate, which is considered, generally speaking, a fairer way to tax, a more effective way as well, less volatility. I think we all agree, those who support it and those who oppose it, that the BNRT needs further study. I think there's absolute consensus on that. I don't think anyone reasonably believes that this proposal will be adopted as presented. There's no expectation along those lines. I think, as you mentioned, Mr. Chairman, this is a starting point. I've challenged people that I've talked to. I can't find anyone who supports it, quite frankly, so I think you've got the supporters in the room here. But I challenge people to take the current amount of revenue the state of California brings in, now to go through an exercise saying you're not going to raise or lower the amount of money you bring in, devise another system. And I challenge you, or I ask you to challenge the folks that come up and who have legitimate concerns about this, to ask what their alternatives would be to answer that puzzle, if you will. I'm concerned about the rate, 4%. We talked about a maximum. I think it's too high, I think. But again, that's an issue that you'll have to work with. I think, as Chris mentioned so eloquently, I think it does keep the progressivity of our system intact. And I think another issue is probably mentioned before yesterday, I assume, that part of the benefit of the BNRT, this package, is that it does lay off some taxes, California's overall macroeconomic tax burden would be less. California, as we all are all very acutely aware, is a donor state to the federal government. This lays off some of that tax burden back to the federal government. So Californians, the California economy will pay less vis-a-vis deductions to the federal government. And it's a big number, and I don't have it.
Seven.
About $7 billion.
$7 billion.
And seven for non-resident companies.
Right. So out-of-state companies, federal government. So those of us who are concerned about being a donor state and not expecting any real progress on that understand that this is a type of this model is a way to address that potentially. I'd also want to mention the R&D tax credit. Becky mentioned it. I think is important. You'll see it's a part of this because if we're talking about 21st century economy, I think R&D tax credit needs to be an important part of that. I also was able to sign on because it did not include a split roll provision, and it did not include a fuels tax, which were things that were discussed and then taken off the table. So with that said, I thank you for your time, and I wish you luck as you start this discussion yourself.
Mr. Chairman, just two comments I'd just like to make, and then any of the individuals around here. First of all, I think you have a feeling for the magnitude of work put in by all the commissioners. I mentioned that yesterday. Each of these commissioners did an incredible job. I just want to make one comment about process, and that is that I really believe that we certainly made every attempt to run as open a process as humanly possible with respect to this commission effort. Every single commissioner had an opportunity to express his or her views. Every single commissioner had the opportunity in public forum to openly discuss the package of recommendations. Each individual commissioner was given drafts prepared by staff of the entire package. There was no question in my mind that every commissioner had an opportunity to either sign on to the report and express his or her views where issues arose, and they were all posted or not. Only one amendment I would make to one of the comments that was made relating to the personal income tax. I think I made this point yesterday, but I wanted to make sure that it was clear again. There is no question that the proposal on the table relating to the personal income tax reduces the taxes for every AGI bracket. You can see that. What we couldn't do was to determine what impact it might have within the AGI brackets on individual taxpayers. So it is possible. I understand that perhaps the testimony yesterday from the Franchise Tax Board may have indicated that an individual taxpayer within a bracket under the existing system might have had the use of more itemized deductions, and therefore it might impact that particular person. But the same way we couldn't determine the absolute impact of the BNRT on an individual company, we couldn't make that determination, and that is something that I am sure you will hear about. But we are very convinced, as presented in the materials, that the system proposed reduces the burden and the tax paid by every AGI bracket as outlined in the schedule.
I'll accept that correction.
Right. I wanted to apologize to you because
For your outbursts earlier?
No, not for that. You wouldn't have felt at home if I didn't do that. I wanted to apologize.
You're referencing my wife again, are you?
I wanted to apologize for interrupting your train of thought on that issue because we just recently had testimony from FTB which showed that taxes go up for a very significant group, and so I should have waited. So I want to apologize to you.
But I appreciate you and the chairman being here to correct me on those minor points.
Well, it's what we're here for.
Thank you.
But having said that, I mean, this is a very significant class of individuals. You're talking about families where there's a joint filing, 2 dependents, their taxes are going up by over 400%, 437%.
Mr. Chairman,
And if they
Mr.
don't have any children,
Since we weren't
it's
here
still going
yesterday,
up.
could you share that group with us?
well, if you know, I asked FTB.
I wasn't here for
I
FTB.
asked FTB to be here as a resource, and I don't think it would take all that much time for FTB to go through the charts and go through the analysis that they made.
Well, if I may, I think the general proposition is much what Jerry said, that eliminating all of the itemized deductions, save a couple, save 3, means that there's going to be a lot of BOWOs, a lot of better off, worse off comparisons that can be made, and I think that and you're going to find a whole bunch of them. I think there was a disagreement. Strike that. I know there was a disagreement on the commission about the simplification goal. I think a majority of the commission felt that simplification was very important, and that introduces more possibilities for these better off, worse off comparisons. I personally don't care about simplification at all. I mean, I taught tax. I have stock in TurboTax. It really has to be compared with other policy goals, and we frankly did not do that. We did not have extended discussion about each of the itemized deductions and whether the policy justification warranted the addition to complexity and the loss of revenue. And one reason we didn't bother doing that is because we knew that ultimately you were going to be much more sophisticated at making those judgments than we could possibly be. We decided to leave it to you. Too hard for us.
The only thing, Mr. Chairman, I would say is that I would go back to the FTB and ask them not to just focus on California taxes, but the combined impact of the changes for that family on the federal and state. Because when you move something a little bit higher for some family, it may impact the consolidated tax burden that family has. And I don't know how many families that would be impacted, for instance, by not having the child credit to be able to use on their California return. My point is, it's a complicated analysis. I would not just stop at the theoretical family that may be impacted this way, and I would look very carefully, as we did, of the combined impact of the burden, federal and state.
Well, I know the members of my committee have, and I'm going to yield and ask my questions after my committee members get a chance to ask their question. But there's a form over substance here. When we talk about progressivity and we talk about share of the burden, it remains the same. It's still progressive. But as was testified to yesterday, I believe, by either FTB or the Legislative Analyst's Office, I don't recall who, it's the value of the reduction in taxes is worth more if you make 101 than if you make $45,000, $60,000. So that we can talk about shares remaining the same. We can talk about progressivity still remaining in the process. But again, as a kid from East LA, I always thought rich people pay more because they can afford it. And so that, and even though I understand, I truly do understand the institutional, academic, and proper use of accounting principles and whatnot. Okay, I mean, the bottom, and you were pointing this out, Professor Edley. Actually, How should I
Well, I would.
how should I refer to you? I'm getting caught up on that. Dean,
Professor
President,
Dean Edley. That would
Dean
be,
Edley.
My
Okay.
mother would be. Yeah.
All right.
Sir.
And I know you were.
Yeah, we refer to him as sir. You can do that.
And I know you were sort of talking about simplicity versus policy, and I understand making the questions, but when from our standpoint, when we try and talk about who's going to share the burden, or if burdens are being shifted at all, if we're going to talk about whether it's a good deal or a bad deal, it gets. I think that we have to interpret it in human terms as much as best we can, and the bottom line is, nobody over 101,000 loses.
If I offer a
Yeah. All right, so it's 250 or more. Okay.
So perhaps one way to think about it would be as follows. If you're moving from a progressive system that raises $55 billion to an equally progressive system that raises $35 billion, you cannot do that with a set of deltas. You cannot do that with a set of deltas that is progressive. You have to do it with a set of deltas that are regressive. If you want to move from a tax system of $55 billion that's progressive to a pit of $35 billion, and you want the deltas to be progressive, what you will end up with is a pit of $35 billion that is more progressive than the pit you started with. I'd love it. I'd love it.
Exactly.
So that's the problem. That's the problem. And I think the majority of the committee seemed to feel that it was more important to focus on the progressivity of what you're left with at the end of reform as compared with what you had at the beginning, rather than focusing on the deltas. That's a judgment call. Maybe you should split the difference. But I think that's kind of where the math drives you, and this is wholly apart from the better off, worse off situation within the brackets that we were talking about a minute ago.
All right. Well, I'm going to start with committee members. I'd like to get as best answer as you can individually, and we'll just go down the line. Do you endorse this proposal?
Yes.
Ms. Morgan and Mr. Pringle? Yes. And Mr. Edley? You can qualify. You can say, I endorse giving it to you and letting you worry about. But I want to know what this vote means. I want to know what the vote means.
Well, let me just start one thing. I could read you exactly what it means.
No. The answer.
Dean Edley can answer for himself.
Yes. Yeah. I endorse it because I am confident that there are 2 or 3 critical fixes that you will make, like the independent contractor thing.
All right.
All right.
Yeah,
And
I
Ms.
mean,
Morales?
yeah.
As I mentioned before, I endorse it because it includes as a package the rainy day fund, and I do have some concerns about the business net receipts tax. But again, this is a starting point, and I think it's important to have the conversation.
Yeah, I would like to make a addendum, though, to my yes, and that is there's standing alone, we are talking about a big principle, but we know, every one of us knows there's devil in each of these details. There's devil in how to create the transition from this system to that. There's issues relating to, as Dean Edley pointed out, we did not individually, point by point, go through every tax credit or deduction and say, is this worthy of keeping or not? We sought for a principle of simplicity, but we didn't fight over all of that stuff, and we know that that's going to be a fight on every one of them because that's how they get in the legislature. I totally agree with the dean on issues of independent contractors and how to shift away that, because some of us wanted to protect the smallest businesses. So small businesses are exempt if they have a gross receipts of $500,000 or less. But that could very well then have an unintended consequence of sucking all types of businesses into the creation of independent contractors, so that every one of those individuals becomes independent contractors under the $500,000 cap. Therefore, they're all exempt. That's not what we intended to do. We wanted to spread the base of a business tax across all sectors of business. So we're presenting this, and the way I say yes is if you take the details and write them up exactly with this as a structure, but the details to a level that I don't support, I'd probably say no later. But you're all looking at, well, what is intended by this? We didn't intend anything other than to show the big picture on how a structure could be presented that may be a better one.
All right, I will start with Mr. Cotto, then Ms. Ma, then Ms. Harkey.
Yes, thank you. Thank you very much for your presentations and your great work with this. I have 3 or 4 questions I'd like you to react to. The first one dealt with, you suggested that the BNRT is going to require further study, right? If you were to prioritize the areas that ought to receive our more critical attention, what would those be?
Well, I think you have heard, about the independent contractor and the concern that we get more of those folks to avoid taxation. But my comments also, I, as a former elected person, would want you to feel comfortable with the revenue to be raised vis-a-vis what has raised under the current system, which is why I suggested the 10-year average and do a retrospective study of it. And I think that so that you're comfortable with both the retrospective figures and the prospective in population and inflation growth going forward. As an elected person, that you are able to explain that and your confidence level in those figures.
I would just point you to the part of the report where we identified areas that needed work, that included, among other things, taking a very hard look at the financial community. We didn't have enough time to rigorously assess how the financial community, in particular banks in California, should be treated or not under the business net receipts tax. I think there was a common belief that if we were removing the corporate tax, banks shouldn't be out from under any tax. But whether they should be included under the concept of a business net receipts tax or whether there should be a separate form of assessment similar to the treatment that we know exists for insurance companies, that's something that you should look very carefully at, and more work needs to be done. We also talked about the need to assess NOLs that exist and have not been used. How existing businesses in California, under the existing corporate tax system, how will their credits and loss carry forwards be dealt with? There's a suggestion made on the NOLs that they be included over a 20-year period, but that work needs to be done. It all relates to the issues around transitioning from the existing system, which has been in existence for a lengthy period of time, to a new system. We offered you an approach to that transition. And finally, the rigorous analysis of revenue estimates is really important in this process. And a commission, under the time frame we were given, we did the best we possibly could, sincerely looking at revenue estimates that could be determined on, as I mentioned yesterday, on the personal income tax, the corporate tax, the sales tax, the combination of the Department of the Franchise Tax Board, the Department of Finance, and the Board of Equalization helped us significantly. On the business net receipts tax, Ernst & Young helped us considerably. More work needs to be done. each of the commissioners, and in my transmittal letter, indicated that. So those are areas that I would say you should work on.
If I could, from my perspective, the big question that you have to explore is, does this BNRT system create an incentive for job growth and investment in California? I mean, to me, that's the question that needs to be answered. We didn't have enough time to answer that specifically going through all the issues that Jerry mentioned and all, but job growth and investment, does it help us or not? Because I think if it doesn't, then we all have to go back to the drawing board. If there's a potential it does, a configuration of it does help with job growth and investment, then I think we should move forward.
Thank you.
I could add a couple. I think that, let me just say that I do have some optimism about the job growth and investment thing. I think most of us do. Certainly the immediate expensing of investments in equipment and so forth is classically thought of as being something that stimulates growth, as does the low marginal rate. A 4% BNRT is compared with over 8% in the current corporate income tax. So those things should help. But one thing I think that definitely needs study is that we've suggested, I think, a sound structure for taxing out-of-state companies that do business in California, using an apportionment scheme that's comparable to what the legislature has adopted for the corporate tax. But I do think you should look at whether there will be compliance problems for out-of-state firms that are pass-through entities that currently, in other words, don't pay taxes, the corporate income tax, because, as you know, the BNRT would apply to all these pass-through entities, partnerships, subchapter S, corps, LLCs. So I'm worried about whether or not the partnership in New York or Ohio, whether there will be compliance problems making sure that we get them to file for their apportioned business done in California. And then another one is the transition problem that's created from getting rid of the corporate income tax and leaving net operating losses that have been carried forward by companies now, and unused R&D credits, things of that sort. Should they be wiped out? Should they be used over an extended period of time? The exact treatment of that, we've offered one that involves the use of NOLs stretched out over 20 years, whether that's the right thing to do. I think thinking carefully about how that's handled in relation to all of the R&D and the startup companies and the high-tech industry in California could be quite sensitive. These are assets on their books. You don't want to wipe out all the economic value immediately. On the other hand, we're eliminating the corporate income tax. They may not use them, and if they weren't going to use them in the corporate income tax ever anyway, do we suddenly want to make them very usable on the BNRT and lose those revenues? So that's something that needs to be thought through.
Let me just intervene because it's right on point. I'll take the prerogative of the chair, but I will come right back to you, Mr. Carter. In terms of the economy, your optimism about the economy growing. The first observation that I'd like to make is that you're tying revenue to a slower growing revenue base than is currently under our current tax system. So the rate of growth may well be slower than under our current tax system. And then in terms of the revenue needed over the 5-year phase-in period, based on numbers that FTB testified to and BOE testified to, there's about a $2.8 billion shortfall based on real numbers that they have on 07 numbers. And then in 2017, the Commission estimated that the BNRT would bring in $65 billion by 2017, and those estimates by FTB and BOE is that it'd bring in $42 billion. $42 billion as of 07. So I'm not sure what that means in terms of growth.
Well, I just make a couple comments. We did not assess, we did not use 2007 numbers. And I do think that the FTB...
Well, you couldn't have used them. I mean, you don't have access to them.
Right. So, but you can't compare 2007 to what we provided. We provided the best estimates we could give for the period from 2012 through 2016. I think it is very appropriate to, and I'm sure this will happen, that FTB and other avenues that you have will estimate the package as we had to do looking at 2012 and forward. And in doing that, it's very important that you carefully assess the growth assumptions in the overall economy. If you think that 2007, I'm sorry, we tried to get a reasonable business cycle, period, that we would incorporate into our estimates. It's important to do the same thing. 2007 may be at a different point of the business cycle than 2012. So in assessing the package and the revenue estimates, it's very important that you rigorously assess the growth assumptions, in particular GDP growth, which is used in part in making these estimates, but rigorously assess those so that they can be compared appropriately. And that process we not only assumed would go on, we're urging that it goes on. Because I want to come back to one point, and that is the rate on the BNRT. From every commissioner's standpoint, we want to be as low as possible. Yeah, it's very much at the heart of the proposal. As you look to making some of the changes, you will have to struggle with if you make certain changes that reduces the revenue from using one rate, it would cause you to move the rate up. And all of that needs to be balanced carefully in the process.
All right, let's go back to Mr. Cotto.
Yeah, back to you about, you were about to say on the issue of the employer independent contractor that there are some ways that we can address that, but you didn't get any more specific. Could you share some more light on that one?
Well, the one that I'm attracted to, and let me emphasize, I think the critical issue here will be from the tax authorities to what they think is most administrable and in terms of compliance. But the principle should be that you get a deduction for business inputs because you're buying from a business that's already paid tax on that. So what you want to make sure is that if I'm trying to take a deduction for someone's labor, that a tax has been paid on it. So if you come to me and say, I'm an independent contractor, I shouldn't be allowed to take a deduction unless you can prove that you've paid the BNRT. Right. Now, that can be done with computers, right? That there can be a check of that sort. You have to worry about Kurt's issue, which is you could be registered as a BNRT taxpayer but be under $500,000 and therefore be exempt, and we don't want to create that kind of a loophole. So there would have to be a different treatment for independent contractors about this $500,000 threshold to avoid that kind of abuse. So what I'm trying to say to you is that it's not conceptually that difficult to plug, as long as you start with the principle that it's a deduction for business inputs only if and because of the fact that taxes have already been paid on it. When I buy a widget, if I make refrigerators and I buy a widget from you in order to make my refrigerator, right, I get a deduction for buying that widget from you. But you have to pay taxes on the money you've made when I purchased that widget. So the value of the labor that was included in producing that widget at your company is, in a sense, deducted when I take a deduction for that business input. And we want to make sure that we don't violate those principles with respect to independent contractors.
Senator, you mentioned the idea that we needed to include some tighter controls on the rainy day fund or the fund for economic uncertainties. Could you elaborate a little bit more on that?
Well, just as happened this year in trying to balance the budget under the excuse, I think the reserves were wiped out. And one of the things that we talked about in our commission was that you could use the Proposition 1A language that was on the ballot in May, which basically says you cannot take out unless your revenues are less than the prior year plus population and inflation growth. So that's pretty much a steady state. And while I have the floor, if I may, I have not had a chance to talk to FTB, but Mr. Ruff was good enough to bring me your papers from yesterday, and I would just ask, are these adjusted gross income numbers or are these gross income numbers? And as I calculate the comparisons that are made here, I would ask you to challenge them.
Okay, then what we'll do is we'll ask our questions. I can do one of two things, and I'll look to the committee members. I can invite FTB to come up and explain the charts now, or we can do it after we've had our questions.
After.
Okay. If you would stay around, well, actually, before you are excused, I will ask FTB to come up and explain their charts.
Final question that I had,
All right.
Mr. Pringle, on any other thoughts
Ms.
about
He has questions.
the final?
Okay. All right.
Last one that I had on Mr. Pringle on the issue of the transition or the phasing in. What other concerns should we have as we look to phasing in this?
I actually think Mr. Edley pointed out to a couple of those that are critical, and that is a lot of the assets that are under present corporate tax law, how those assets, be it net operating loss carry forward issues or other credits, how they are utilized, how they're transitioned, do they go away to a zero value? Our transition plan, for example, establishes the elimination of the corporate income tax in the first year as you start implementing a business net receipts tax. If, in fact, that is something that does eventually get adopted, you do have that immediate challenge in the first year of what you do with all of those corporate credits that have been accumulated. And I don't think anybody wanted to strike all of that to a zero value, since that is a okay. Some people.
No,
but those are that is one I think that we kind of toyed with and actually punted, and just said we can't figure that out under our charge at this time for this purpose. If that is a part of implementation, if that's the direction the legislature chooses, that's going to be a tough issue.
Thank you very much, Mr.
Ms. Ma.
Thank you very much. And I think, I don't know, one of the speakers said that this is definitely bold. We're going someplace where nobody else has gone before. And I do believe we need to attract businesses, and we need to keep jobs here in California. I mentioned yesterday when I was on the Board of Supervisors, San Francisco has a payroll tax, and so we actually penalize companies for employing people. And so under Mayor Willie Brown, I convened a revenue advisory panel, and for 18 months brought the stakeholders together, went through kind of a similar process as all of you, educated all of us to how we generate revenues, what other states do, and then we put all these options on the table. And at the end of the 18 months, the stakeholder group that had been meeting actually voted and ranked which ones they would prefer. And the top two went to the ballot. Unfortunately, the voters did not pass it. We still have a payroll tax, and the only way to get around it now is to propose tax holidays, like for biotech, 10-year payroll tax holidays, in order to attract certain companies to come to San Francisco. So, I mean, that's not the best way to do it, right? I applaud you, because I know you guys have a mandate to bring something to the table. thank you for, I guess, helping us avoid the most contentious issues, which would have been Prop 13 or expanding the sales taxes services, because I think we need a bigger room, because everybody understands that. My concern is, as Mr. Mr. Edley said, is this BNRT. It's a new system, and our corporate tax system has been around for, I don't know, 70 plus years. It is very complicated, interrelated, international issues, credits, and I'm just not comfortable at this time that there aren't unintended consequences, whether this is going to create more jobs, whether businesses are going to flock here now because we don't have a corporate income tax, for example, or we don't have a sales tax. I don't know whether the Franchise Tax Board has thought about that, or the other big accounting firms. I worked for Ernst & Whinney, Ernst & Young, and I probably need a little more time to get their advice based on their clients to say, hey, this is going to work. If we're going to eliminate the sales tax, eliminate the corporate tax, and reduce the personal income tax, we need to ensure that we are going to have income to replace it, or additional income, which is what we want for the long term, right? So that's where I'm not quite sure yet, and I think the fixes with the independent contractor, that is going to be important, maintaining some of the the tax credits that companies have been rolling over from the past. I think those are important. I mean, it's complicated, I think, this BNRT, and nobody's done it before. Nobody can tell us, what works, what doesn't work. And so I'm going to need more time to really feel comfortable that this is going to work and replace the, billions of dollars of revenue that it's supposed to.
A couple of quick points, and of course we appreciate your caution and the reasons for it. I think there was a consensus, at least there was a strong majority in favor of eliminating the corporate income tax, because I think most of us thought it would be inappropriate to have two different business transactions taxes, the corporate income tax and the BNRT. And the corporate income tax is relatively small, $11–12 billion, and declining as a share of contribution, very manipulable, doesn't apply to all forms of businesses, right? The increasingly common partnership, Schedule S, LLC forms of business, where the economy may be heading more. But if you think about aggregate burdens here, we've taken about $15 billion out of the pit, increased the amount of revenue that's going to show up on tax forms signed by businesses, but also exported $15 billion worth of the burden. $7 billion because the BNRT will be deductible on federal returns, and $7 billion that's not going to be paid by California businesses, but by out-of-state businesses doing work with us. So we're not actually increasing the aggregate tax burden facing the business sector in this proposal. And we're reducing the marginal rates. Instead of a corporate income tax rate of 8.84%, we're going down to, we hope, about 4%, which in itself is a powerful incentive. Together with the immediate expensing, I'll tell you, look, as a matter of federal tax policy, I mean, the holy grail of business lobbies in Washington has been to accelerate depreciation allowances as much as possible and preferably immediate expensing. Well, in a value-added tax, that's what you get. You get immediate expensing. Now, as you use up the equipment and it depreciates, you don't get a deduction, as you do in an income tax. And when you sell the used piece of equipment, the used widget, you have to pay BNRT on your proceeds from that sale. But up front, the immediate expensing should be, it's always been thought to be, a stimulus for capital formation and job growth. So all of those things taken as a whole, the reduction in the marginal rates, the immediate expensing, and so forth. I think there's a very strong economic argument to be made that this is positive for business growth, for job growth specifically. And I have to say, again, as a paleo-liberal, I thought it would be really cool to give Democrats an opportunity to vote to eliminate the corporate income tax.
How do you Democrats feel about that?
Not so fast.
No, but seriously, I mean, because
And I guess the other question is like, why aren't all states talking about this?
well, because California may have an opportunity to lead here. It's obviously quite difficult to do politically, et cetera, but we can also look at the experience in Europe with having a value-added tax for decades. And I would say that with respect to the issue of revenue generation, just 2 quick points. One is, it's both Jerry's point about the business cycle and how you have to do the estimate, but also we were trying to do estimates that would be consistent with the way your bill will be scored for purposes of Prop 13, for purposes of the 2/3 issue. And so you have to bear that in mind as well. How's it going to be scored? Will it be scored as revenue neutral? And on the broader issue, if the savings rate in macroeconomics, if the savings rate does not change, then consumption, and this is a form of a consumption tax, should grow as fast as income. Should have the same growth rate, unless the savings rate changes. There's no reason to believe that the savings rate is going to change in a secular way. Over the business cycle, it goes up and down. People pay off their credit card bills or whatever. But overall, we shouldn't expect the savings rate to change, unfortunately. So consumption should grow at the same rate as income. If we're taxing consumption, we should be able to raise as much revenue as you can raise taxing income, except the progressivity of the income tax will lead it to generate more income over time compared with a flat tax on consumption, which is why I think it's important to try to maintain the progressivity of the income tax so that indeed, over time, it's going to do what we need it to do for the revenues of the state. I hope that wasn't too confusing.
No, not at all. But if you go back to the E&Y incident report, they estimate that based on this proposal as presented, that consumption and labor will bear 55% of the total burden. And that's the pass-through as well as the test, so that you'll have labor making less or paying higher taxes. You'll have them paying higher prices as companies pass through the BNRT back to labor. So you can almost argue the savings, this could result in the savings factor going down. I mean, the savings actually going down because a certain class, a big part of the 65 to 45, is having to spend more to survive.
Well, let's not have that happen.
And wages will be depressed as well.
Well, the question is, as compared to what? Right, so we are eliminating.
As compared to the current system
Of sales tax?
Well, you know what? Here's the irony. The irony is that we hear constantly from our critics, we on the Democratic side, and many times it's from the Republican side, but we hear from our critic that you're taxing business out of this state, and we have the highest tax rate when it comes to corporate tax, and what are you doing? We want to create jobs, because if you create jobs, then it grows the base and everybody benefits. Well, here you have a bipartisan group with some very prominent Republicans recommending a BNRT.
Wait, prominent Democrats and Republicans.
Well,
You're more prominent.
okay, prominent Democrats and prominent Republicans.
Very good.
Recommending this BNRT, and no one in the business community that I've talked to yet thinks it's a good idea. It's new, and I understand that there's a lot of questions, and there's no experience, and all that, but but they all have some pretty, thought out issues and predictions. And if those bear out, then won't that be incentivizing business to live the state? So I think, Mr. Morales, it was just a bell went off. I mean, really, you hit it. I mean, the idea is this going to grow jobs? Is it going to grow the economy or not? And if you can cut through all the fear of the devil we don't know, there still are a lot of issues that are being raised and questions as to whether or not that will be the case. And if it does grow, is it going to be in the longer term, possibly, not the near term, and in how long? How long do you reach a point where you get more revenues?
Those are very legitimate questions, and anytime you propose something new, you will hear from those institutions that have made a quick determination that it's going to be negative. I would focus very heavily on the rate. The rate is extremely important in this equation. If you can figure out a way, which we didn't because there are other forms of revenue. Let me give you an example. Take this system, and I don't want to get this committee into arguing back and forth about AB 32. But somewhere else in this building, AB 32 is going to produce a significant amount of revenue that, if dedicated to the general fund, might allow you to take this existing system and have the BNRT rate be 1.5% or 2%. And then you will hear from many businesses, and they will say, oh, I compared this with my existing structure, and I like this. So again, this was not meant to be a proposal for you to vote on. This was meant to be a proposal for you to help the process at really understanding, keeping these goals in mind. But this rate, unanimously around this commission, could we figure out a way, still achieving these goals, changing the revenue-generating system here in a way that solves these goals, but keeping this rate down? Broadening the base to include services was almost unanimous around the table. Almost unanimous. Please don't go away from achieving that goal.
Well, let me ask you this, then. Understanding that you think the BNRT should be lower.
As low as possible.
Low as possible. Do you agree that it might have to be higher than 4%?
No, I don't.
Well, but I mean, we have stated it could that we felt that it was more important to keep the BNRT at 4% than to allow all the roll-in of the entire package, and that means some elements of the sales tax, pennies of the sales tax, may have to be.
Oh, sorry.
As we propose the steps in our rollout, to say, you know what, we want it to be a revenue neutral package. Therefore, at the end of year 4, you may see that the BNRT is at 4 to cover all of the previous, and you have to leave a penny on the sales tax. That's how we envisioned that rollout. But I think to keep it revenue neutral, there may be a discussion in the legislature to do it differently. If you see that there may be a value of a higher BNRT, which I don't like personally, but if the legislature saw to keep it revenue neutral, to do all of the elements of the PIT reductions, the corporate tax elimination, and the 5% elimination on sales tax, to do that, it may be more than 4% on the BNRT. We envisioned that. And we said we would stop the roll-off of the sales tax.
Right.
A legislative decision may be the opposite, to say we want to roll up the BNRT because it's working and capture the very last elimination of the state general fund sales tax. So it's not that we just felt that there is a cap and a concern at a level of the BNRT.
So keep don't go away from the rates, don't go away from revenue neutrality, but even if it means that you change the equation as it currently exists, because the equation is no sales,
right. Well, let me
lower income tax, BNRT at 4%.
I think during the period of the transition, where you really want to make sure that you're hitting your revenue goals, that it's generating as much revenue as the old system would have generated, you want to make sure you're hitting your revenue goals, then you have to use the sales tax to modulate over the course of a tax year, because the sales tax is the one that you can adjust to the third or fourth quarter. You can't do that with the income taxes. So you have to use the sales tax to modulate to make sure that, so you can really nail down precisely how much revenue is the BNRT generating. So, but after you've got 3 or 4 years of experience, you'll have a lot of confidence in the revenue characteristics of the BNRT and different economic circumstances, et cetera. Now, frankly, at that point, I would probably part company with some of my colleagues here.
Never.
If it turns out, right, if it turns out that to hold the BNRT under 4% but produce the needed revenue, you'd have to keep some of the sales tax, I'd rather keep some of the PIT than the sales tax because of the regressivity of the sales tax. I'd rather have a 6.7% top bracket in the sales tax, or a 7% bracket at 250K or something like that. In other words, I'd rather make up the revenue shortfall on the income tax than leaving in the sales tax. If you do that, apart from the political battle, you bring back some more volatility because you're slightly increasing the contribution of the PIT to the overall revenue mix. So that again gets to this question of the additional volatility from tweaking upward the PIT versus tweaking upward the sales tax. Close. Or tweaking up the BNRT. Now, I will tell you that, again, from a progressive standpoint, a lower rate on the BNRT would be just peachy keen. Again, because it's not as progressive as the income tax. So if you give me a choice, I'd rather have a lower BNRT. It's great for business.
Thank you very much.
And more from the PIT, not so great for the wealthy. But those are the trade-offs that I think you can make, again, within the overall structure of the package.
I want to actually come back to that issue of volatility, because that seems to really be driving the analysis here. But I want to give Ms. Harkey an opportunity to ask any questions that she may have. She's been waiting very patiently.
I am, and I don't often do that, do I? No, I want to thank you. I've really enjoyed this discussion. One of the issues we heard yesterday in loud voice was that there could be a tax on companies without any profit, and so that would impact startups or let's say our biotech industry or something like that, where they go for a long time without making money. How do you see that working? And I'll let anybody answer that.
I'll take the first shot.
You go.
First off, I think there's a couple things to look at. One, there is a specific focus on the smallest businesses. Again, you have to get to $500,000 in gross receipts before that kicks in. So there has to be some activity of receipts before you even have to file under the BNRT. But two, I think that is one of the two issues where business will focus and be critical, that we are deliberate in shifting from an income-based tax structure in our proposal to more of a consumption-based tax structure. And that means that there is a flat requirement to pay, be it when you make a lot of money or when you don't make any. And that is a deliberate attempt. That's not something that is not there. It is there. And you'll hear businesses say, we didn't make any money, therefore we shouldn't pay any taxes. I think it is deliberate on the Commission's point of view to say there might be a tax obligation. Those businesses pay sales tax presently on the purchases. Therefore, they are paying taxes even when they don't make money. Therefore, a business net receipt over $500,000 in gross receipts is something that they need to pay. Your LLCs today are paying a minimum franchise tax to this state. So you are paying a corporate tax today even when you make nothing. Even when you do nothing with that LLC, you're paying a $800 minimum franchise fee. That would be eliminated under this. So, you know, there are comparisons of apples versus oranges, but I mean, I don't think that's anything to avoid. So business will have a concern about that, but I will make sure I share with you directly. Business will also have concern that they may, if they choose never to pass on any of the BNRT, there may be a shifting of some of the burden from individual taxpayers to business. The personal income tax is reduced by about $14 billion in this equation. Most of those are individuals paying that tax. It's being made up by a BNRT. The sales tax is being reduced by $27 billion in this package. About half of that is paid by individuals, people, not businesses. That's being made up by the BNRT. So historically, around this place, I personally believe there's been a shift of taxing obligation from business, in many cases, to the individual. And in fact, lobbyists that will come before this committee today or forever will, by and large, be people representing businesses or industries as opposed to individual taxpayers. And I think that is one of the things that is missed. There's no question that there is a shift from individuals paying a certain amount of taxes to business paying to make up that difference and that reduction. That is not lost or something that's a surprise to anybody. That happens. We believe most of that BNRT, though, will be passed off on in the cost of goods and services. Businesses may not like that.
Okay, thank you.
May I just add a word there? I think that what Kurt was just saying about the incidence of the sales tax in part responds to what the chairman was, the incidence data that the chairman was. It's kind of as compared to what, and what gets shifted to labor and consumers under the current tax system as compared with what would happen with the BNRT. So I think on the specific issue of startups, it's both the $500,000 gross receipts filing threshold and the $250,000 net receipts exemption or zero bracket. Now, maybe those are the wrong numbers. You know, maybe instead of 250, it should be 350. Maybe instead of 500, it should be 750. Right? You can play with those and see the revenue implications of that, and you can shift those upward at the cost of 0.1 or 0.2 on the BNRT. Is it worth it? Well, you know, we made our judgment, but that's exactly what you can do. I did have one specific suggestion you might think about on this startup issue. You could take either the 250 or the 500 and not make them a one-year snapshot, but actually give businesses a once-in-a-lifetime elective to average over 5 years or 3 years, something like that. So that if they're just starting up and they get 200,000 one year and then $1 million the next year, so you see what I point? You basically want them to get up to that level kind of on a sustained basis before you start burdening them with the tax. That would be, now again, there'd be a little bit of revenue loss, at least initially, with respect to that. But if you decided this were a serious problem,
something to work. The next question
I'm sorry.
Oh, sure.
The R&D tax credit and retaining that within the BNRT for biotech.
Okay, so that would work for the biotech. The next question that I have is for Commissioner Morgan. You've found favor with the tax tribunal, and I like the idea that prior to paying, it would be good to be able to go in and speak to somebody. What I'm hearing, and what I'm hearing, and the other one is what I'm fearing. The legal process is kind of a bad avenue, at least for a small business, or because you've got, in essence, you'd have to hire an attorney, and you'd have to weigh the cost of hiring the attorney versus paying. So I'm questioning as to how that would work out in the second, or how you reconcile that. The second problem is that any appeal can be filed by the state as well, which to me is really a problem for most businesses because the state has full resources to its, to present its case, and somebody who was being appealed by the state and would have to use their personal resources, and it could be really, depending on the circumstances, could be a very, very bad turnout. So it may even prevent people from petitioning.
Well, I think in the current situation, most people hire an attorney anyway when they go before the hearing board. And it was our thought, and it was shared by someone who testified before our commission, that one, it's the upfront payment that's troubling to both individuals and to businesses. When you're appealing, why should you have to pay a tax that you really believe you should not have to pay? And then, as I say, hiring the attorney. You're right, I guess the state could appeal, but this is really set up for the individual and the corporate taxpayer who feels that they have been unfairly treated.
Okay, thank you. The next question, I believe, could go to Mr. Pringle or even Mr. Edley.
Well, that's a
I shouldn't say Mr. I should say Dean. Curtin Dean. There you go. No.
Yesterday there was a reference to king in the hearing. You can do that too. It's
a king. Okay. One of the issues that I see with this, I mean, I'm very open-minded about the whole process because I realize we will have issues to deal with in between to perfect it. You have not had that long. But looking back and modifying over a 5-year period, a company thinking of perhaps expanding in California, or a company thinking of perhaps maybe starting a business in California without certainty, they can deal with the downside and the certainty. If they know what it is, they can kind of work around it. But over this going back and forth for 5 years, not knowing what you're dealing with, I fear that would really discourage any capital investment or expansion in the state over that adjustment period. What do you think?
Well, I don't if it's done the way we suggested. No question, the uncertainty of a roll-in system with the potential of stopping it and changing it at mid-course could affect people in a strong way. But what we suggested is in year one, as you create the BNRT, in fact, you eliminate the corporate income tax. So in terms of business development, that is a very positive step. Many other folks might grumble about that, but it's a positive step in the sense that you do change the system in year one for businesses, startup businesses, expansion of businesses, and you reduce the rate from 8.84%, which is the corporate income tax rate. You eliminate that system completely, and you create a BNRT at about 1.6% in year one, is what is suggested. So with that BNRT is paid on the business net receipts, and you receive all the benefit, as Dean Edley pointed out, of the immediate expensing of the purchases. So you could be here, set up a company in that first year, all the purchases from that manufacturing facility that you're now reestablishing in California or growing in California get immediately expensed, and the BNRT is on the business net receipt after you take off the purchases from your gross receipt, and you're only paying 1.6% on that. So I believe the way we suggested is probably a very positive stimulant to the economy in terms of business relocation and expansion here.
Wish we could do it every 5 years.
Yeah. Well, that's obviously what we're trying to do, is increase the size of the pie that California has by increasing the opportunity. That's my goal: increase the opportunity here and keep people here and keep production up, which we haven't been very good at. The split roll, I want to go back to that, and that was with Commissioner Morales, I believe. Did you say that you would favor looking at that, or you would not? You would not. Who would favor that?
I think quite strongly.
I think it was Mr. or Dean Edley that was interested in that. What I have heard, and what we get challenged on this all the time, but is that in essence, under a lease agreement, which is triple net, that would be passed on to whoever's leasing the structure anyway, and that would be business who would then either have to go out of business or pass it on. So what is the benefit of the split roll in those circumstances? It's going to be borne by the consumer, as I think, somehow.
Well, I think any business tax is ultimately going to be borne by consumers or labor, so that doesn't trouble me. Well, here goes my credibility. Look, I mean, no, I don't. Right. Look, I think the fallout from Prop 13 is killing the state. My wife and I were afraid to move to California because we see what's happening to the schools, to the infrastructure, et cetera. So I think the bigger problem is Prop 13, both pieces of it. The reason that it would have been nice to do the split roll is simply because it would have been an incremental step towards reforming Prop 13, not that it has independent logic. Having said that, I willingly let go of it for this process because it's not doable now, and I really wanted to be a part of trying to produce something that might be doable in the current political climate. So we left it really out of the discussion after the second hearing.
Well, actually, we had one full day on the property tax, and we left the split roll concept was still on the table. At the very end, we went around to every commissioner and asked whether they wanted to have it included in the report at all. Similar with the pollution tax, which was left on and presented extensively in the last two sessions. And every single commissioner expressed their views that they did not want either proposal, either in the recommendations of the commission or even in the section dealing with non-commission recommendations, but enough commissioners supporting it.
Okay, thank you. One of the points that I think needs to be stressed in this argument, and I know we'll get into it in our rev and tax, but I understood, and I appreciate your honesty. People are trying to overturn Prop 13, and I understand why some might. The problem that we have in newer areas of the state, where when Prop 13 was first implemented, we were rural in Orange County, and so our funding to our schools, et cetera, is considerably lower because everything goes to the state and gets distributed. And as you know, that's one of the court cases that held up Prop 13 was allow equal access to education. That being said, we have learned how to tax and bond ourselves and provide for our local entities, and we're not sure that we would ever get anything more back from the state. And I don't believe that we would. And so to the extent that communities that this could be, funding could be local and geographic so that people and voters could actually vote on what they wanted in their area, that's one thing. But to feed the state coffers when we've already got, we get a low distribution, we have a mellow roost for schools, transportation, whatnot, that's an extra tax. We form HOAs to take care of local district issues. It's like fees, but we at least know that it's local. Mm-hmm. And so in our Measure M for our transportation, and we do things that we think we need. The problem is the state is so large that you send it up here and we never see it again. So that's the huge issue in my mind. And also I was around prior to Prop 13. I was actually in a little bank as a clerk paying those taxes manually on impounds and watching people come in and scream at me because I needed $2,000-3,000 right before Christmas to get their tax payments out because things were just going that high. So there was we were all very glad, and at least that's some certainty, and it adds some stability to the revenue stream, because even in these downtimes, the income tax or the property tax has remained relatively the same because of it. So I think we would have had a much harder crash if we keep monkeying with that. And also I think it's politically not feasible. Most people would go through the roof. But I think it's easy to attack a business or say this is just on a commercial property because businesses pay, people don't. But the problem is people will pay. in the ultimate analysis.
So for me, it was one of the important considerations in signing off and recommending moving forward with the report was the fact that it was not included in the
Yeah, well, I do appreciate that. But anyway, thank you so very
A
much.
couple other quick items on Prop 13. I mean, there were certainly folks like Dean Edley, but I mean, practically, we wanted to present to you a report that could be adopted. And if the significant increase in revenue came from a modification of the Constitution requiring a voter approval, what you do is you send every potential discussion in front of the voters for deliberation, and there'll be plenty of people to unravel that. Secondly, it's because of Prop 13 and post AB 8 life, there is formulas now for the property tax dollar to be distributed to local governments, every local government being different. So one of the other concerns that we had, and even putting in a split roll discussion, is what value is it to the state if there's somehow a new claim that every additional dollar that may be generated through property tax is no longer a local tax, but in fact a state revenue. Then you have a weird relationship to the existing formula. Right. If you claim that somehow that the additional raise and split roll is going to be shared in every county as it is presently shared under an AB 8 formula, then in fact you are raising a lot more money through the split roll that would be able to be applied to the general fund offset that is a part of what we included in the BNRT. It seemed to us that with those issues relating to local state relationships and distribution and the constitutional issues of the split roll, even though there were some that still wanted us to discuss it, that we wanted to look at a package in which we could share with the legislature as a practical opportunity to implement.
Well, I'm very happy that it was off the table. Very happy. Thank you.
Okay, let's go back to, sorry. All right, well, I'll be quick. We're in a time pressure. I went way over yesterday, and I don't want to do it today. You know, the issue. Let's go back to the issue of volatility, because you really can't. Even the proposal of the commission doesn't deal with it without the rainy day fund. Rainy day fund has to be changed in order to get the kind of rainy day fund that you need in order to capture. We'll call it, you know, excess or windfall revenues, and that's going to require.
Well, just to interrupt a second, the estimates provided on volatility relate to the tax changes. The rainy day fund captures. There still is volatility in the proposal, but the 42 or 40% decline in volatility does not take into account the establishment of the rainy day fund.
Well, let me tell you why I put them both together, because the volatility, I don't believe, comes from the peaks and values of revenue. It comes from the way government works.
Yes.
Programs are developed and aren't budgeted on a year-to-year basis. So whether you have, no matter how much money you have coming in, you're going to have volatility until California changes the way it adopts and develops programs. Now, right. However, one way that you can keep or educate California and put some restrictions on them is to limit the money, and any excess put it in the rainy day fund. True. Which is why I made the observation yesterday that this looks strangely familiar to the governor's you know, spending cap and rainy day proposal. But let's go. The volatility I think comes from the way government works.
I don't quite understand that, Mr. Chairman, and so you need to probably educate me a little better. That is it a challenge to Prop 98 that you're concerned about, since that is the only constitutional resetting of a floor based upon a revenue levels?
Well,
everything else is a legislative direction.
I mean,
so is that what you're concerned about?
I think
the implications of Prop 98.
I was talking about a budget stabilization account, which was, I think, a constitutional.
Mm-hmm. Well, but but the revenue volatility under the current system occurs regardless of how we spend our money. Or the revenue volatility is only a bad thing when we lock in expenditure levels when revenues drop. And we either lock them in constitutionally under Prop 98 for education, or we lock them in statutorily because we create programs to spend revenues coming into the state to address state need by the legislature.
Right. If I may try, the way, when we started this process, I'm sorry, Mr. Chairman, when we started this process, first day of the hearing, I argued that volatility ought to be thought of as an expenditure issue, not as a revenue issue. Get the revenues in the door as much as you can, and then have a policy about how you spend it. As far as I'm concerned, you could solve this whole thing if you had an enforceable rainy day fund, rainy day fund mechanism. So there was a division of points of view on the commission whether to try to let's call it the boom bust budgeting. Right? Let's call it that. Whether to solve the boom bust budgeting by modulating revenues or modulating expenditures. What we ended up with is a compromise where we've done both. We've modulated revenues 40% by having a less volatile revenue structure, but we've also added a rainy day fund. So the two together, we think, do a substantial amount to help both sides of the equation and curb boom-bust budgeting. You could do without either and accomplish less, but we tried to, so in a way the package represents a balance of those two perspectives, treating it in part as a revenue problem, in part as an expenditure problem, when in truth, at least as in the abstract, you could handle it completely using either tool, but this is politics. I'd also say that we were very self-conscious about trying to make changes in the original Prop 1A formulation. And which I have you noticed, and I thought that was key. And
the only other thing, Mr. Chairman, I'd just like to add there is that we were given information, and I would welcome your obtaining the similar information as to what would have to be done, not changing the tax system at all, in order to have had a rainy day fund that would have had adequate reserves. The estimate we were given the pattern that has existed over the past 5 years, I think it was, would be in a given year, you would have had to reserve as much as $25 to $30 billion, or close to 30% of the general fund. Impossible to do. And so that was one of the comments back to those members of the commission that said, Chris being one, well, but do you recognize what you would have to have done if this system was in place or left in place? So that drove us to say, we're not going to be able to fix volatility totally if we leave the current nature of the personal income tax in place, albeit less of a percentage. But we can augment it with a firm, real rainy day fund. So it's that combination. And so I would be very cautious about refraining from making reform because somehow you think, not you, but the committee or the legislature may think we can solve all of the volatility question just by a rainy day fund. I don't think that can be done.
Well, maybe not. And I agree with your assessment, Mr. Pringle, in terms of those programs that we can't change anymore because it's by initiative. But I was leading to the larger question or larger issue, and that was that it would have been helpful. Now I don't know what the constraints of the commissions are, but it would have been helpful to really have a discussion and analysis of why we are where we are. Going from no, I mean, in other words, here's our starting point, and if we were king or dean, This is the fix.
Right.
All right. However, understanding the political complexities that could be involved, and even though this is the way California should go to protect itself and to prosper, here is another alternative. You know what I'm saying? Yeah. So that I mean, we stay away from the holy grails. 98 and Prop 13, and yet we all understand that those two propositions are the crux of the problem, and the benefit of having a commission, an independent commission with prestigious members such as yourself, is that when you come out and agree on the nature of the problem, and in a perfect world what the fix would be, and then work back from that, then it becomes easier it may not help, but it certainly becomes easier for us to debate here in Sacramento in terms of which way we should go, without it being a Democrat or Republican directed position.
Well, let me just say a couple things on that score. The task or charge of the commission was fairly clear, and that was to deal with the revenue system that exists, the tax system generating revenue. It was not to deal with the budgeting problems, and it was not to deal with issues of expenditures. And that was pretty clear to us as the commission was established. We noted, however, significantly in our statements that this was only one element of needed reform. There are other organizations, maybe not commissions, and I would urge you to consider establishing a commission, but maybe not inviting any of the members here to sit on it, but a commission that would deal aggressively with the issue of how budgets are created. Should they be one-year budgets or two? What the votes should be necessary to pass a budget? What should be the requirements for creating programs of any kind? But it was quite clear in our charge that we were not asked to opine on that, other than, as we did, to identify organizations like California Forward, the Bay Area Council, other quality organizations are coming forward, some of which may be embodied in ballot initiatives, some may be embodied in recommendations to the legislature. Those efforts of reform should be seen as complementary, if you will, to the recommendations that you got from us.
I wasn't belittling the product of the commission or the work that they did.
No.
I've been very clear that California owes this commission a great debt of gratitude. But volatility naturally results in an analysis of where are we, how did we get here, and where are we going?
Well, Mr. Chairman, as you noted, I held a number of positions working for President Clinton, and as did my wife, who was the president's deputy chief of staff, and went to 3 Middle East summits with President Clinton. And one of the things that she observed is that whenever the parties started talking about how we got to this point, things broke down completely. And I
That's an interesting analogy.
And it really, and it, I think.
A lot of things said about the legislature, but we haven't yet been compared to the Middle East.
You're getting there, and I also think that frankly, because we felt like we had limited time and we kept missing deadlines, and we did send the governor some IOUs, but still people wanted us to finish. And I think if we drafted a longer report and tried to get agreement over the text.
Well, and you know what, and the issue I'm raising may have been entirely out of your control, But my starting point in raising this issue, goes back to testimony by Mac Taylor, the legislative analyst. He said, I've been hearing testimony, and it's all couched fundamentally in terms of a fix. He says, I didn't know our current tax system was broken. And
Has he been sleeping?
well, he made observations about changes that could be made that would be good changes and incorporated in this proposal. But it begs a question. I mean, how is it that volatility started with a change in our tax laws when generally tax law is not the best way to engineer government?
Could I put it as a mother? If it costs $200 a month to provide the food and the shoes for my kids, and in 1 month I get $500, and so I spend it all on them, and the next month I only get $100 of revenue, are they not going to eat, or are they not going to get a new pair of shoes? So this volatility impacts their life, and this volatility impacts the life of California.
We're back to rainy day analogies.
But if there was savings, call it a reserve, call it a rainy day fund, but if there are savings, then I can go over those humps of not having the revenue come in. This state has no reserve. And so you get what you've been dealing with for the last year or two of having to make all of these cuts, whereas if you had a savings account, as in a family, or a reserve for economic uncertainties, you could weather those downturns. And it is that up and down that creates havoc.
Right, but you have a choice as to whether or not to pay to send your child to school or not, and you probably wouldn't want to cut there, even if they
No, I
need
said
shoes.
basics like shoes and food.
Well,
Maybe food is
well,
shoes
but
aren't basic,
if you're required to buy a new pair of shoes every year, you wouldn't have the discretion to prioritize and to budget. And that's the problem we have here with 13 and 98, among others, but certainly those are real big culprits. And instead of really trying to educate and create some momentum in a bipartisan way towards fixing that problem, we're going to change our tax laws. Not necessarily for the worst. I don't want to suggest that at all. But we're going to try, and instead of going back and attacking those holy grail issues, we're going to experiment and see whether or not it could work if we try this new tax structure, and we think it will, and that certainly is easier to do because it's a majority vote bill, but the bottom line being that that's even scarier to a lot of people than the debate and the discussion over how we should change property tax as a source of state revenue and funding of education as a mandatory function.
Well, go ahead.
I think you're absolutely right. Our charge was in a few months to give a best model for the tax side of it. And we couldn't help ourselves, and we had to include the rainy day fund side as well. It was important. But you're absolutely right. It's a much broader conversation. This is all we could get done in 9 months.
And your charge was very limited. It's
And our chairman kept us to task.
Fix this problem
As he should.
by not going to the source of the problem, find another way to do it. And then just change our tax laws. Well,
but really, I'm not going to buy all of that completely, even though I certainly will drop to one knee in your committee chamber. But I don't know necessarily if I want to have within this report the focal point as being the rainy day fund, the fund for economic uncertainty, or any of that. I do believe there's a problem with revenue structure. And if that is not an accepted position by all, then so be it. But I do believe there's a problem with that. And this and it's not solely based upon, do we cap off those spikes? There's a problem when there are drop-offs in that revenue stream as well. And so I don't believe, if you listen to everything Jerry said, there's no way we could have had enough money sitting in a reserve to pay for the plummet of revenues that we have seen in the last couple of years. There's a value to a rainy day fund. That's great. All of our cities, in many cases, most of our cities have them. But, I could not have paid in our city budget the level of decline in personal income tax that the state felt. I am fortunate that even though I have a great bed tax receipt in my city, there's a diversified revenue stream to my city that is not based solely upon the most volatile of the taxes during economic times. But this revenue stream for this state is based on the most volatile revenue source. And it's not just a way of saying, well, Prop 98 limits us here, or Prop 13, we could have raised property taxes along the way to get more money to cover over this hole as property values plummet. But in fact, I believe one of the challenges is under every circumstance, and I haven't spent as much time as some of you in the legislature. Well, I haven't spent as much time as you in the legislature. All the rest of them I have. But I don't know if the legislature,
public service.
under any definition, can contain themselves when revenues soar. I don't know if programs will not be developed, or that we somehow can see 10 years down the line that some year we're going to have a depression-like state as we felt now. So I do believe the issue is, how do you modulate the ups and downs in revenues, just like how do you address expenditures so we don't race them up too fast during good times, and how do you cap off those great juicy years where we can scrape off some of the frosting and put it aside for those are all parts of a system. We didn't look at all of that, and but I also don't buy into the fact if we just had a great rainy day fund, this could all be resolved.
May I suggest some treaty language here? It seems to me that it's pretty unarguable that your view of how serious revenue volatility is as a problem depends upon whether you're looking at revenues in isolation or whether you're looking at our entire system of governance and how it functions and what the constraints are and so forth. And I took the chairman to simply mean that we have a whole series of issues related to governance, and that we've come up with something which tries to solve a lot of those issues by just focusing on one of the variables as opposed to looking at the whole, to which we could plead guilty. And if there were another commission looking at the whole thing, I'd love to serve on it if Parsky is chairing it.
Okay, thank you for that, Hal. Let me just try again. My comments are not directed so much at the commission as it is to the charge.
Yeah.
Right. And that's very legitimate.
Volatility is only a problem if you continue to charge in your credit card. Right. It's that simple. And then to say, okay, wait a minute, we got to quit this volatility. So let's change let's change your occupation. Let's change your career. Let's change the way you make money, and that's going to at least bring in a predictable amount of money, which won't matter if I continue to charge.
That's probably true, but I would say this: it's very important to keep in mind that the total revenues generated during the same period remain the same, so that over a 5-year period, you're going to get the same total revenues. You decide whether you want more or whether you want less, but it's going to be a lot smoother. And if you can determine, I suggest another commission or maybe an initiative to change 98 and to revoke 13, and once that's done, you will then hear from the voters of California what they would like you to do on that side of the coin. And
I understand. There's a difference, between having the goal and lowering the goal. But you should have the goal first, and then work out from that standpoint. So I'm not playing down the political realities and difficulties in changing anything of what I've been talking about, to be sure. But we never will change it if we don't get an education of the public to to start understanding, so that we can give them these kind of choices. All right, here's the problem. We got to fix it. Now here's the fix. We're gonna lower your income tax by 50%. We're gonna raise property taxes.
Well,
what do you think?
Give it to them. I think it would be a good choice to put on the ballot. And I think I know what the answer is, but I may not.
I'm sorry, my peripheral vision isn't what it used to be when I was in the legislature the first time.
I just reminded that yesterday, because we went over a considerable length of time, that you suggested that I remind you when we were spending too much on each panel. With all due respect, if we can.
All right. Well, then I'm not going to ask any more. I don't think I have any more. I think we've discussed it. But I am curious, only because the issue's been raised. Where did the BNRT come from? Was there a presentation? Did one of the commissioners do a paper? Or
again, I'll rack my memory. I know that the derivation of it came from the fact that we were seeking how to bring services into the tax base. And initially, our discussions revolved around extending the sales tax to services. And that became problematic for all the reasons that we mentioned. So we asked staff, what else could happen? And so this concept grew out of, I can't remember whether it was a commissioner that suggested it or not, but
I know Boskin and I both mentioned the VAT.
Right. Yeah, I think Chris and Michael Boskin may have mentioned the value-added tax as another form of tax. So it evolved really from the discussions of how do we broaden the base to include services.
All right, and finally, would it be unfair to characterize this commission report as saying, among other things, that the commission believes that the starting point is is taking a look at income tax, sales tax, and corporate tax, and in this case, recommendation eliminating it, and focusing on a business tax to make up the difference. Is that too simple?
With a broad-based, low-rate business tax.
With a broad-based, low-rate business tax.
I think
a constant business tax.
Yes.
Unrelated to.
And Mr. Chairman, with all due respect to Dean Edley, and he's more of a policy wonk than I am, but I think your voters would be more trusting if it were more simple. The whole tax code.
I mean, I agree. Now, I think if we'd have. Yeah, it should be real simple for them to understand and not be suspicious or fearful of.
And just keep in mind the goals.
All right.
The goals were very good goals outlined. And as you seek to change, please don't abandon the process because it's difficult. This is a very important subject. I can't think of a higher priority for a committee like this than to really continue to dig in. I'm sure any of us would be glad, given the amount of time we spent, to be of any assistance we can. Don't let the naysayers, who basically want to create confusion or fear, stop you from addressing this. It's very important.
And those words are well spoken and I think very helpful. Let me just tell you, I think it was an enormous accomplishment to produce this report in the time that you had to. Given the subject matter that you were dealing with, it was amazing, and so I don't by any means want to demean that effort, belittle it, or ignore it either. I mean, I think you've given us a lot to think about, and I liked, the, the ability to just one side on the scale of justice versus the other. And of course, then we'll just deal with the devil you don't know. I mean, that's always a problem. There's no question about it. But I want to thank all of you. You've performed a valuable and much needed service for the people of California, and you deserve to be recognized and praised for that fact.
Thank you very much.
Thank you very much. Mr. Edley?
Okay, whenever we're in. Please, your signing ceremony.
Right. Oh, now you may.
All right, we're going to continue now. Mr. Metke.
You can invite him and Dan Simmons at the same time.
Yeah. Thank you. Thank you very much for your time and for everything. Thank you. All right, here's what we're going to do. We have Mr. Mitke, and then we're scheduled for, and Professor Simmons from Professor of Law, University of California, Davis. We have allocated 30 minutes for them, and then 50 minutes for 5 other witnesses, which we've requested to testify. So our target here will be no later than, well, let's see, 2:30. Our target here is 2:30.
I'll be quick, and I have a feeling we'll be back.
Okay.
Thank you very much.
All right, our 2 witnesses, Eric Mitke and Professor Simmons. And let me tell you a little bit about both of them. Mr. Mitke is a partner of Nielsen Merksimer, specializing in state and local taxation, high technology issues, and economic development. Prior to joining the Merksimer firm, he was legal counsel to the State Board of Equalization member Ernest Dronenberg, Jr. He also has been a senior consultant in both houses of the California legislature and a tax attorney for Pacific Telesis Group. Mr. Methke appears regularly before the Board of Equalization and Franchise Tax Boards on major tax controversy and regulatory matters. He handles significant tax legislation before the California legislature, often working in conjunction with major taxpayer groups such as the California Taxpayers Association. He was the principal draftsman of California Taxpayer Bill of Rights and coordinated lobbying strategy for bills such as the Omnibus Property Tax Reform Act of '95, SB 657, and the extension of the Manufacturer Investment Credit to software manufacturing and the California Internet Tax Freedom Act. His practice covers most aspects of California taxation, including income and franchise taxes, property taxes, sales taxes, use taxes, employment taxes, excise taxes. He's a tax expert. Okay, now, Mr. Simmons, Professor Simmons. He's a professor at my alma mater, University of California, Davis, where he's been on the faculty since 1976. Professor Simmons teaches basic federal income tax, corporate, and partnership law. He is co-author of casebooks on federal income taxation of business organization, and federal income taxation of corporations, and federal income tax. Wait, I didn't read that right. He is the co-author of casebooks on federal income taxation, federal income taxation of business organizations, federal income taxation of corporations, and federal income taxation of partnerships and S corporations, as well as the author of numerous other articles. Recent articles include reform of the California tax collection process and taxation of built-in gain and lost property in partnerships. Professor Simpson received his AB degree in '64 and JD degree in 1971 from the University of California, Davis. Following law school, he was a law clerk for Justice Louis Burke on the California Supreme Court. Professor Simmons served as professor in residence in the office of the Chief Counsel of the Internal Revenue Service from '86 to '87. He has been on the executive board of the State Bar Tax Section and has served as chair of the Teaching Tax Committee of the ABA section on taxation. He's been a member of the governing board of the California Continuing Education of the Bar. He has testified before the California Commission on Taxation Policy for the New Economy and the Assembly Judiciary Committee regarding the creation of a state tax court and has testified before the California Assembly Budget Committee and Revenue and Taxation Committee regarding tax policy with respect to abusive shelters. He is the graduate group chair for the University of California, Davis Masters in Law in International and Commercial Law. Did I say that right? I'm having trouble reading today. He is the graduate group chair for the University of California, Davis Masters of Law in International Commercial Law. And he is a member of the American College of Tax Counsel and the American Law Institute. It's a pleasure to have you here, and we certainly appreciate it, even if I cannot read. I think what I'm going to do is I'll ask Mr. Simmons, or Professor Simmons, if he would like to proceed first, and then Mr. Medke. Mr. Medke, he appears regularly, so I can do this. Although you do too, apparently.
A couple of times.
Yeah.
And thank you, Mr. Chair, members of the committee. Hopefully my comments will be brief enough that they'll be shorter than your reading of my biography. It is an honor to be here, and you know, I can't really add much in the way of detail to what you have already heard. I thought I would like to just give you some of my thoughts about what to think about in terms of responding to this really terrific and very impressive piece of work that, as you've noted, the Commission has put out. As you all recognize, the current crisis is really a combination of revenue shortfalls and spending pressures and the structural budget issues that you were talking about earlier today. All of that does not mean that this is the perfect time to turn the tax system upside down. Nonetheless, of course, the Commission does have a lot of good ideas and perhaps some bad ones too. Let me start with this issue of volatility that you were talking about a few minutes ago. I think perhaps, well, I think my view is very consistent with yours. It may be somewhat overstated. If you look at the years that are cited in the Governor's Executive Order, 1999-2000, that was a period of time where there was this enormous growth in personal wealth for a limited number of individuals, mostly because of the use of stock options in a ballooning market. And then in the next couple of years, a large piece of that wealth disappeared, perhaps in part because the whole thing was somewhat artificial in the first place. And also, there's a lot made about the growth of capital gains during that same period. Whatever that means. You know, capital gains is not an economic term. It's really a creature of tax. And I think what has happened, or what did happen in that period, is that organizations, corporate organizations, used devices to provide compensation to their employees that took the form of things that, for tax purposes, we call capital gains. And so what you saw a lot of was a conversion of normal compensation income. A dollar is as green as a dollar. The conversion of a lot of normal compensation income into capital gains. And so I think you are on really thin ice in a way by restructuring tax policy based on those kinds of notions of volatility. A second point about that is that during times of great economic growth, sound fiscal policy tells you to pull money out of the economy. You should be increasing revenues through taxation for the same reason that the monetarists want to increase interest rates. You want to slow things down a little bit. And during bad times, you want to reduce taxation to provide stimulus. Well, in a sense, as Chair Calderon pointed out, the problem there is not volatility in the revenue stream, it's volatility, it's control of the spending stream. In good times, you want to tax and create reserves. In bad times, you want to use those reserves to provide stimulus to the economy. In a sense, we get that a little bit backwards. I know when I have talked about this with some friends recently, they've said that telling the legislature not to spend in good times is sort of like telling a bartender not to sell another drink to a drunk. But, you know, and for maybe that reason, the proposals about a fixed reserve may well be a good idea. I have a little more faith in the legislature than that, actually. But the issue is spending restraint in good times. It's not really changing our tax structure. The piece about tax burden in the report may be accurate, but a lot of those studies, I think you have to look at them very carefully because they can't compare property taxes across the country. Property taxes vary so much by county that it is very hard to build really legitimate comparisons. And just a comment about the use of numbers. There's a table in the report that tells us that California is the 4th highest tax state amongst households. That same report has a table in it that tells us that we're 11th when you look at per capita taxation. So you just really have to be very careful about what kind of numbers that you're looking at. One thing the Commission does tell us, and I think it's around page 15, 16, that California has become more progressive over time because of the personal income tax. I think that's a good thing. Progressivity in the tax system based on the idea that people with more wealth should make a bigger contribution to the state revenue, I think is a good thing. And, you know, the way it's written in the Commission report a little bit, it sounds a little pejorative, you know, as if it's a bad thing. And I guess my whole career as a tax scholar leads me to start to really think that we want a progressive system, and moving to a tax collection revenue-raising device that's more progressive is a plus. And that's part of the large-scale policy issues that I think you really need to talk about. You know, tax policy is sort of determining who is going to bear the burden of funding the necessary governmental services that we need and require. And that's the decisions that you all sort of have to make at that level in terms of figuring out how to allocate that burden. And the one thing that's clear about the Commission proposal is that it shifts the burden of taxation from high-income individuals to consumption. Who consumes? Or who consumes a large portion of their income? Middle, lower income individuals who don't have enough discretionary money left over after they've derived their earnings to fully satisfy their consumption needs. Whereas individuals, higher income individuals who derive enough income to satisfy consumption have the ability to set that money aside in savings and investment. And what this proposal really is doing in a large sense is shifting the burden of providing state revenues from the higher income individuals to consumers. And you heard the commissioners, almost all of them, I think, pointing out that this really, the business net receipts tax is really a tax on consumption. And so whether it's a good idea or not, whether you think it's a good idea or not, you do have to recognize that what you are doing is shifting the burden of tax. Yes, as Dean Edley pointed out, you may keep the distributional impact of the personal income tax the same, but nonetheless, looking at the whole picture, you are shifting to consumers. Final comment is I think there's some good stuff about the business net receipts tax. It is an intriguing idea for a couple of important reasons. It does pick up services, and I think you all appreciate the impossibility, really, of the negotiation that would be inherent in shifting or moving the sales tax to pick up services. And also it does pick up sales into California where we don't really have a way to make people comply with the use tax element of the sales tax. I think that it is really intriguing for both of those reasons. There may be some shifts to service providers, and I think Eric is going to talk about that in a minute. There's some shifts to service providers in the incidence of tax. Some of that may be mitigated by the credit based on $500,000 of net receipts and the like. There is one big flaw, I think, in the proposal that I'd like to mention, and that is the failure to include debt in gross receipts. Because you have a total deduction for investment in equipment and machinery or other inputs of production, you need to include debt in gross receipts. Otherwise, you completely eliminate the tax base with debt, and you collect no revenue from this thing. The idea of the business net receipts tax is based on a value-added tax, and that problem doesn't exist in the value-added tax. You have to face up to it with this. One other comment about an issue that some of you raised, the problem of employees versus independent contractors. I do think that gets resolved a lot because the price of the independent contractor, you need to include them in the tax base as a trade or business, but the price of the service that they provide also will reflect the value-added tax, and maybe it is not, it certainly is not in my mind a showstopper. Two other comments. One, I really do like the recommendation, and I've written about this at some length a few years ago, the recommendation of combining or putting the Revenue Department in the governor's office and making the governor responsible for that. And more importantly, the recommendation about an independent tax tribunal for California. In my mind, there probably is little more you can do to provide certainty and predictability to our tax system than have an independent tax tribunal of some nature that decides cases on the law, writes opinions, creates a body of interpretative precedent that can be a guide to taxpayers so that the investor coming into California can ascertain what the after-tax return on his, her, its investment coming in, whereas under our current system, because the decision-making process in tax disputes, in my opinion, is pretty unreliable, you have a great deal of uncertainty built into the system. Again, thank you very much for the opportunity to give you my views.
Well, you know, on that last issue, we really haven't talked that much about it. I wouldn't characterize this as a concern of mine, but a question I guess I have is we're dealing with taxes, and does a tax tribunal then lead to a harder line at the regulatory level? Because the tendency may develop, like it does, of course, in other states, to give the agency the benefit of the doubt. To give the agency the benefit of the doubt, and therefore maybe create an unfair burden on the taxpayer.
I can only answer that based on my experience as a professor in residence in the Office of Chief Counsel of IRS for a year. And to add to that, I think that in the Franchise Tax Board, we're fortunate in California to have an excellent tax collecting agency. My experience in the IRS was that people working in that world work to get it right. And that they're, well, that's the best I can say. I think people work hard to get it right, and I, at least in the Internal Revenue Service and in the Office of Chief Counsel, where positions were formulated on a national basis, I had never heard the notion of let's take an aggressive stance because we might be able to be successful at it. And I do not, just from following and working with people in the Franchise Tax Board, I don't think that that's the philosophy of that agency either. So that piece would not be a concern of mine at all. You know, and the other part of that is that it is your responsibility as the legislature and the responsibility of the governor to make tax policy. And what we see happening today in the Board of Equalization, who you know, it's a good group of hardworking, dedicated people, both at the elective level and in the staff. But what you do see is tax dispute resolution being based on people's vision of policy, and in a sense that usurps the responsibility of the governor and the legislature in the tax world.
All right, we'll come back for more questions. I'm sorry. let's come back to this. All right, Mr. Metke.
Thank you very much. Mr. Chairman and members, I too appreciate the opportunity to testify today, accept your invitation and testify on this very important subject. And again, echoing the comments of Professor Simmons, the Commission has done a great job in introducing a product that is going to stir controversy and discussions for many, many months to come. In the 30 years that I have been involved with the practice of California state and local tax law, I've worked at both ends of the pipe. I've worked at the policy end for the legislature and administrative agency, and for the last 20 years represented private clients on an individual and collective basis on their tax problems. And I know one thing about having experience at both ends, as one of the commissioners pointed out, the devil is always in the details. And part of despite the great work of the Commission, I think the legislature needs to keep one thing in mind at the outset, which is that we've been speaking in very broad generalizations about tax policy and in quintiles of people. Well, quintiles don't pay taxes. Individual people pay taxes. And so as an overlay to all of this, I would say bear in mind, too, that at the end of the day, whatever policy the legislature decides to pursue is going to have play itself out on an individual taxpayer basis, and you need to understand what those effects are going to be. I thought it was great yesterday that the Franchise Tax Board brought some of those examples forward, and I've got a few today, real-life examples that you can see how this will play out, because it does tie the policy issues that have been discussed into a real-life setting. And I think that might make it more helpful for you two as you decide which way you want to take the California tax system. One of the recommendations I would have, you've already started to do, which is to question all the assumptions that are being made. The Commission, rightly or wrongly, has sort of made the assumption that our fiscal difficulties to a greater degree are due to volatility in the system. And therefore, because it's due to volatility, we need to fix volatility in the tax system, and therefore this solution is basically to say we're going to lessen our reliance on the personal income tax system, and that's going to be our way of dealing with it. Well, last year I appeared before the committee, and basically what I told you was basically what Mac Taylor said yesterday. I look at the tax system and I see a robust system. I see a broad-based system that taxes income, wealth, consumption, and over the long haul has done really quite well for the state. So I think a lot of these assumptions need to go back to basics and really do need to be questioned from the start. Speaking specifically to volatility, I view volatility in a very simple way. I mean, if I'm an employee of a firm and I have a salary, and the firm has a really great year, and I get a bonus, that makes my income volatile. But by the same token, really the issue is how do I spend that money? Do I spend it on retiring my debts, one-time purchases, or do I use it to buy a bigger house with a bigger mortgage where I'm assuming I'm going to have that bonus every year? Now, in some ways, the Commission's answer is don't pay the bonus. I think there are other ways that the legislature, without going down that road, could handle it. One way, I think, was suggested to the committee by Professor Stark of UCLA, which is, well, instead of having capital gains all realized in 1 year, or have capital losses realized in 1 year, spread them out. In other words, take them into income over a period of 3 or 4 years and recognize the losses over 3 or 4 years. That's a natural smoothing process. You know, we can model that, but then again, you don't have to throw the entire system out in order to accomplish that. I would urge the committee to go back and re-examine all of those possibilities as well as what the Commission's laid before you.
I'm just going to admit that I just drifted in the middle of that, and then I realized it was such an important point. So please, and my colleagues, I hope you'd forgive me. Can you go over that point again?
Sure, absolutely.
Oh, and I want to acknowledge Mr. Bell. has joined the committee.
Don't drift too much.
Well, some of this stuff can be pretty
Somebody
mind-numbing.
drifted into my car and hit me today. So.
Oh, is that right? Oh, my gosh.
We'll have to talk about that. A lot of people seem to drift when I speak. Maybe the problem's not you, Mr. Chairman.
Okay, well then, if you could,
I'd be happy to.
Repeat that
I'd be happy to repeat that. The notion being that, again, if going back to the bonus analogy, okay, if I get a bonus in the course of a year, that makes my income volatile, okay, because I have my baseline income. I don't know I'm going to get the bonus, but I get the bonus.
I got that point, but what about the spreading it out?
Okay. Well, what if my boss came into me and said, I'm going to pay you a $10,000 bonus, but instead of paying it all this year, I'm going to pay you $2,500 additional a year for 4 years. So that takes it into my income. Instead of I having a $10,000 bulge in my income that year, I now have an additional $2,500 a year for 4 years. That's the same principle. In other words, you could have recognition of capital gains, not all in the year that there's what we call in the tax geeks call a realization event, the sale of a stock, the cashing of an option or something like that. You could, in fact, take that into income over a longer period of time. And the same way with losses. You know, we're recognizing if there's a capital loss, all of that in 1 year. You could spread those as well. So, and I believe this has been, isn't that Professor Stark's suggestion?
I think so. Well, and we went through periods of income averaging in the federal system for a long time.
And it's just specifically related to this one item of income. I mean, and that's if you believe that the legislature does not have the restraint to deal with, okay, how can we identify this volatile part of the personal income tax stream and treat it differently? Now, there are problems because a lot of times the FTB can't tell what capital gains were until it's in the rearview mirror a couple of years. But I would imagine there are some ways that you could do some normalization to figure out what portion of that is going to be capital gains and then deal with that separately. But on the other hand, if you don't feel that you can have that kind of restraint, then the other option is something like an averaging approach to that item of income. So the only point of this being is don't assume that just because it's in the proposal that there's no other ideas out there that were examined or that aren't good ideas.
Oh, no. I don't think anybody in this committee makes that assumption. We understand that there was there were trade-offs and priorities and other factors, group dynamics that led to this adoption of this. But we don't know. In fact, I even want to have a session on alternatives.
Great. The next thing I would encourage you all to do is not be hamstrung by viewing this proposal as a whole proposal, as a package. If you really think about what this is, there's one big revenue raiser, and that's the BNRT, and then there's 3 revenue losers, and we're putting them all in one revenue neutral bill, right? That's a simple way to view this. But if you think about it, you've got this whole business net receipts tax. It has a rate, but different portions of that rate are going to pay for these different revenue losers. So, and on top of that, the business net receipts tax, as you've heard for the last couple of days, it's sort of like a sales tax and it's sort of like an income tax. It's a hybrid. So I think it is fair, as you go through your analysis, to compare the business net receipts tax to each one of those taxes it's either lowering or replacing, and not view this as a whole package. And you should be looking at who's paying the tax it's replacing, who's paying the BNRT, that portion of the BNRT. And because to that degree, to the degree you find out that any one piece of this from the revenue loser standpoint isn't justified, you can eliminate that portion of the BNRT rate if you decide to go with the BNRT at all. So I don't know how much time you want me to take. I can go through each one of the 3 losers it's replacing and talk about those exchanges, or I'm going to submit all this in writing to the committee so you can have it in that form. It just depends how much time you want.
We have about 5 more minutes, so why don't you go through it real quick? Maybe 7 more minutes.
Well, okay.
I mean, 2:30 is our target, give or take.
Okay. Well, let me just see if I can burn through that, and then I do have a couple of
because I would be interested in hearing. I mean,
Sure.
There's been a lot of discussion about who bears the consumption and labor will bear 55% of the cost. I think business will bear something like 37%. And so capital gains, very little marginal shift in burden. And so, it's been posited by the Commission as, it's all one thing. But then they have been suggesting through oral testimony, well, you can do this or you can do that. You can increase this. You could not eliminate that. I mean, so I would be interested in this comparison of winners and losers that you're talking about.
I'd be happy to do that. I'll try to be brief as I can. Let's start with the BNRT in relation to the bank and corp tax. It goes without saying that there was, at least I have not heard any testimony by any of the witnesses that appeared before you, nor at the Commission, that anyone from the business community or a business taxpayer asked that for the business net receipts tax to replace the bank and corporation tax. So this was not something that was driven out of the corporate community at all. The BNRT is going to apportion income, of a multi-state business. We have to figure out how much comes to California. Under the BNRT as proposed, that's going to be a mandatory single sales factor method of apportionment. The legislature, as of 2011, adopted a policy under the current bank and corp tax that you're going to have an election to either use the current double-weighted sales factor method of apportionment or single sales factor. Going to a mandatory single sales...
I didn't support that, but I thought it was a good idea for reform, but Jesus, I didn't think we should give the store away.
Yeah. The point I'm making is I'm not placing any normative judgments on these, whether they're good transitions or bad transitions. I just want the committee to be aware of them. And also, the BNRT is set up on mandatory water's edge apportion, for defining what the combined group of companies is going to be, whereas, again, under the bank and corp tax law, it's an election. It's a long-term election, but it's an election all the same. I think it is safe to say that the bank and corporation tax is neutral on the issue of whether a taxpayer would favor labor or capital as a purchase, perhaps slightly in favor of labor, because if you buy a machine and it's a capital purchase, you have to spread that depreciation over a period of time, whereas if you hire a human to do the job, you can take those wages as a deduction now. So there may be a slight bias in favor of labor. I think it is probably beyond dispute from all you've heard that the BNRT will create a bias in favor of substituting capital, machinery, for people. The way it's set up, if you buy a machine, you get a current deduction against your gross receipts. If you hire a worker, those benefits and those wages are non-deductible. So that is, to some degree, I think, creates a bias in that. Now, is that a big deal or not a big deal? Well, we're in a double-digit unemployment. Some would say that creating a tax system that substitutes capital for labor is not a good idea. There's been a lot of talk about this issue of misclassification of workers and outsourcing and offshoring. Because you have a water's edge system here, because you have payments to third-party independent contractors deductible where employees are not, there is certainly a bias in that direction. I perhaps disagree with Professor Simmons. I don't think this is going to be easily resolved. The idea raised by Dean or Prince or King Edley that can never keep it straight.
I'm responsible for that.
Yeah, I know. That you simply deny deduction to someone who isn't paying for a payment to an independent contractor who is not paying BNRT merely sets up a bias against the smallest worker in favor of somebody who's larger. In other words, I get a deduction if I hire you because you're above $500,000 in gross receipts. I don't get a deduction if I hire you because you're under $500,000 in gross receipts. That's not a solution. And if it were easy, the Commission should have had something by now. Also, the idea that if you hire an independent contractor in New Jersey who is not regularly and systematically contacting the state of California, has no physical presence here, has a one-office law firm in Newark, and performs legal services for you, the thought that we'll be able to somehow reach that service that's being performed there by that independent contractor, I think while you can always erect a theory, I think ultimately it will prove to be the triumph of hope over experience. So I don't think that independent contractor issue is going to be easily resolved.
And I guess indirectly there's some incentive towards mechanization. I mean, that's where business goes anyway. But certainly, if you can get, one machine to do the work of 10, then you're going to want to do, and you get a one immediate year, same year deduction.
Same year deduction, dollar for dollar.
Dollar for dollar.
So it seems to be something I think that more analysis needs to be performed on. There are one other quick thing I want to mention is that the bank and corp tax has a number of credits in it, as does the personal income tax, but the only one the Commission decided to retain was the research and development credit. If you view, as I tend to, that a tax credit is really another form of a government program, a government subsidy for something, the Commission is basically proposing to eliminate a whole bunch of programs, which include things as low-income housing tax credit, enterprise zones, the credit for establishing or contributing to a child care plan. I mean, these are all things that the legislature thought were a good idea when they put them into place. Now, this is an opportunity maybe to sunset all these programs and start anew. So it could be a good thing, could be a bad thing. But it is something to bring to the forefront and say, hey, this is something that's going to go on. I'm sure you're going to be hearing from those folks. Before too much longer. So that's a very brief flyby on the comparison of the net receipts tax to the bank and corporation tax. On the sales tax front, because a portion of the BNRT rate is going to go to raise revenue to pay off or to buy out the state portion of the sales and use tax, to me there's two real issues here. You're broadening the base dramatically, and you're also effectively removing major exemptions in the sales tax base. If you think about the broadening of the base, everybody thinks of services, legal, accounting, educational, medical. But, I mean, educational services, I didn't see an exemption there for higher education, certainly privately provided. But also there's things in there like rental housing. So now a landlord that rents housing is going to be subject to BNRT on that, and they're not subject to that under the sales tax. These are all things that you're going to have to grapple with in terms of if you want to go forward with the BNRT, do you want to expand the base to that? I don't think that you avoid the difficulties of expanding the sales tax to services, the political problems, by going this route. Because when landlords find out they're going to be paying 4% on their net business receipts from their rents, you're going to hear from them, and that's going to be an issue. On the other hand, too, the removal of exemptions, the big three exemptions under the sales and use tax are food, utilities, and prescription medicines. And with one fell swoop, in essence, those are going to be eliminated. And so one of the things you really, I think, need to do is ask for, when you're doing the analysis, not just overall who's paying for what, but in this case, who's going to be paying for, who pays that under the sales tax, or who pays the sales tax now, and now when we're eliminating all this, who's going to be paying for that portion? So ultimately, there's going to be a real premium on that.
How does this impact internet firms? Internet service providers, for instance.
Well, you heard some testimony about that yesterday. The real issue is going to be, how does the Supreme Court view an untested tax? What nexus rules does it apply to it? There was some talk about the Michigan business tax, which is a little similar to this tax. But the main case on that was Trinova. That was decided 2 or 3 years before the lead case on sales tax nexus, Quill. And not only that, the Michigan tax requires physical presence. So nexus was never an issue in any of those cases. the Trinova case in particular.
Really?
So the point is that there is a lot of uncertainty about how a court is going to view this. There's arguments. I think the FTB memo, which they may have presented to the committee, they certainly presented to the commission, did a good job of giving the arguments on both sides. And I think Mr. Joseph yesterday did a good job of recognizing that there are risks. And I think it is very, very difficult to say how a court's going to evaluate that and how they're going to apply it to an internet firm.
Let me ask you, Professor Simmons, how would you analyze the issue of nexus in terms of economic presence sufficing or not passing muster in the Constitution?
I am nowhere near the expert that Professor Stark at UCLA is on this topic, but I think that the United States Supreme Court has, in more, I can't give you the citations off the top of my head, but in more than one case recently, have refused to grant certiorari in cases where state courts, I think the last one came out of Minnesota, where state courts have upheld imposition of taxes on substantial business presence measured by the amount of business that's being undertaken. So there's some indication there that this $500,000 threshold that is in the proposal might be sufficient to give California the ability to assert jurisdiction to collect taxes from internet sellers. But as Eric says, the question is by no means clear.
One other thing, too, is it's important to understand, too, that the standard will not be evaluated by the court in a vacuum. In other words, this is not going to come up and say, is this bill constitutional or not constitutional? The court's going to be applying it to a set of facts. And it's the facts. Like I mentioned, if you have the cases that Professor Simmons mentioned involved, to a large degree, cases where there was intangible property being used in the state. And I think Mr. Joseph mentioned that yesterday. And in Quill, even, and in a lot of these cases, there's bombarding of the state with regular advertisements and really systematic sort of contact from the outside in. But if I'm an attorney, just sort of the law practice in New Jersey, I don't advertise into California. I don't have an office there. I don't even have any friends there. But if somebody brings a law project to me as a California customer, and they're going to enjoy the benefit of that in California, that's going to be what the court is going to be asked to say, gee, well, does that give this lawyer an economic presence in California because he performed services completely outside the state, but the benefit of it was enjoyed in California? That's going to be that's a very difficult legal issue, and I don't.
And of course, you know that smart litigators will set up the challenge case involving the accountant or lawyer or single individual from New Jersey, rather than bringing it with Amazon.com or something of that
exactly.
nature.
So it's hard to say.
Well, okay. Ms. Metke, I'm going to ask you to come back on Wednesday, if you're not already coming back. Oh, you're not scheduled to come back on Wednesday.
I'm not, but I schedule permitting, I'm happy to do so.
Well, because I think you have a lot to offer in terms of, analysis of this proposed tax system versus the current tax system, and not that you don't, Professor Simmons. But
that's quite all right.
But you couldn't come, right?
That's correct.
You're not available.
That's correct.
But I do want to ask you just a few more questions, then we're going to go move on. But you mentioned the fatal flaw in the BNRT proposal as presented here is that it doesn't take debt into account as a business expense.
As a gross receipt.
Oh, as a gross receipt. Yes. So debt to the company?
A borrowing by the company, because the tax base as it's contemplated allows a complete deduction for capital investment.
Yes.
So you borrow 100x and you make 100x capital investment. You have 100x deduction against your income, if you will, your sales receipts. But the borrowing doesn't, under the proposal, is not counted in your gross receipt. So in a sense, you can use debt financing to completely eliminate your liability, and then you pay the debt off over time. It is an example in a sense that the current income tax system has, in a way, the same flaw with accelerated depreciation, because we actually provide tax subsidies to capital investment with the accelerated depreciation that is funded by debt finance. So to make the system work, I believe that you have to include debt in gross receipts. And it's offset in terms of the tax base, because when you borrow the 100X and then use the 100X to buy a machine, it has zero impact on your tax liability, and then your the gross receipts tax is then calculated on the basis of your actual sales. But if you borrow the 100X and buy the machine, and you get to deduct 100X when you purchase the machine, and you don't have to include the debt, then you avoid the tax on 100X of sales until the well, you avoid the tax on that 100X of sales.
That is a big hole.
It's a big hole. It's a huge hole.
It's a huge hole.
Well,
they only take the interest in income.
Yeah, they only take the interest into income, is right.
And
so what I think you have to do is include the borrowed proceeds in the tax base as gross receipts, and then you allow deduction for the repayment of the principal on that loan. So in a sense, then you're taking it into account appropriately in terms of timing.
But your take on whether or not we should change our tax structure for this, you don't think there's anything wrong with the current, anything wrong that requires a major shift away from our tax structure? I mean, you said BNRT is not a bad idea, but I thought you also mentioned maybe now's not the time to do it, or...
Well, I don't see, it doesn't make any sense to me to give up the revenue from the current progressive income tax base. I do think that the BNRT is an interesting substitute for the state part of the state sales tax for the couple of reasons that I mentioned. It does bring in services, although as Mr. Menke made very clear, what you will do in a sense is increase the price of a lot of things that aren't subject to the sales tax, and his example of rental income is a very good one in that respect. That's the pass-through. That's why the tax falls on the consumer.
That's the real question, isn't it? I mean, the Commission is talking about volatility. So they're saying the way you avoid volatility is just limit the money you take in. Just limit the money you take in, and also to impose a tax on business that exists whether they have profitable or not. What about that? How do you view that aspect of the tax?
Well, it is a flaw in that kind of a tax base, because you do have expenses against profitability that aren't allowed as deductions. That, in part, that's the long-term attractiveness of the income tax, because it is based on profitability. It imposes the burden of paying for government on ability to pay, what you have in your pocket at the end of the day. Now, our measurement is certainly not perfect.
Right.
And there's a lot of ways you could broaden the income tax base that the Commission report doesn't look into. In a sense, eliminating some itemized deductions is a tinker, if you will. And the itemized, what are they talking about eliminating? The medical expense deduction, the employee business expense deduction, investment expense deductions, and that's about it. And those are expenditures that probably are more significant to lower income taxpayers than the high income taxpayer anyway. So they're not really broadening the personal income tax base effectively. You could broaden the corporate tax by slowing down accelerated depreciation. For example, for California purposes, adopt the U.S. alternative minimum tax standards, because most corporate taxpayers have to calculate that anyway. And you're not imposing simplicity. There's absolutely no simplification in their proposal, because they really aren't simplifying the income tax. I suppose there's corporate level simplification, but you still have the federal corporate tax. And what we do in California is piggyback. So, our California system is not as complicated as people are are suggesting in a way, because you are piggybacked, for an individual, you're piggybacked onto the federal return with just a few adjustments. So it's not terribly complicated, and in fact, for most, Professor Bankman's ready return advocacy solves the complication for most people anyway by having the Franchise Tax Board do the calculation for them. So, I don't see simplicity coming out of this proposal. Simplicity is something that you all ought to be thinking about seriously, but it's not part of the commission.
I mean, the economy is going to shift, and there's going to be enormous revenues at some point in the future coming into California based on our existing, and that those revenues should be given up for to have a less volatile revenue stream. It's kind of an interesting concept, and going back to the basic charge of the commission, I take issue with the governor's executive order in saying that we need to volatility is the key, and we need to do away with volatility. And of course, anything coming out of the governor's office and here, I am a suspect only in terms of the fact that the governor is the governor, and he's of a particular party, and I'm of another party. So you always look askewed, and I keep saying this looks like his spending cap rainy day fund proposal.
There, since you mentioned the names Republican and Democrat,
Yeah.
There's a tax historian at UC Santa Barbara by the name of Elliot Brownlee who wrote a fascinating book, and his thesis is, and I think he's absolutely correct, that post-Civil War, there is one thing that consistently distinguishes the Republican and one issue that consistently distinguishes the Republican and Democratic parties, and that is historically the Republican Party has favored consumption taxation, and the Democratic Party has favored progressive income taxation. And probably the only reason that we have overall a progressive income tax system is that during the periods in our country's history when we've had great need of revenue, the Democrats have been in power. World War I, the Depression, World War II, the Vietnam War. And you might add that the current financial crisis to that list in the long run. I hope not, but
I'm tempting to keep an open mind, but of course I have many questions. And one question that keeps nagging at me is this, and it kind of goes back to Mr. Keeley's testimony yesterday. I don't think you were here, but when he started out, only to the extent he said, basically your actions are guided by your view of the world. and this view that I'm getting, although I'm trying to resist it, this view I'm getting sounds strangely familiar to what we see during our budgeting process.
Well, yeah. I mean, make no mistake about it, I think, and if I go away leaving any thought on the table at all, is that this is a shift to consumption taxes. The business net receipt tax evolves out of a value-added tax idea. It is a value-added tax. It is just calculated and assessed a little bit differently. But it is basically a value-added tax. It is basically a tax on consumption, and so what you're talking about is a switch to a consumption tax. Now, you're thinking in whether or not you want to make that choice. The advocates for consumption tax argue that it favors savings and investment because it doesn't impose a burden of tax on those who are in a position to save and invest, whereas the income tax does. And it shifts the burden of tax to those individuals who are in an economic situation where they have to consume most of their income. So really that's the fundamental choice that you are faced with in whether or not you want to go the route recommended in this report.
Well, that was very helpful in terms of at least my feeling a little more comfortable with that kind of a question. and it not being chalked up to my natural orientation towards conspiracy theory. But, I mean, it's nice to hear it articulated in historical terms. Okay, well, Professor Simmons, I'd like you to talk to you again, see if you can come back when we talk about alternatives.
I would love the opportunity.
That might be available. We could really find that helpful.
And also the tax court.
Oh, and also when we talk about, we're going to have a separate hearing because the committee wants to have one on the tax court.
Yes, good. And I will put in them. I think Ms. Jaffe may have a copy already, but I'll again mail you a copy of my article on that subject.
Great. And then we'll include it as part of the record.
Yeah, good. All
right, thank you very much. And Mr. Rankin, we'll see you Wednesday.
Thank you very much, Mr. Chairman.
All right, thank you. Okay. You know, I'm gonna try and get out of here at 2:30. I don't think we're gonna make it. More like 2:40. But I want to invite our witnesses all to come to the table, even though they each have issues which may or may not be related to each other. But since they are those part of the usual suspects, you're familiar to the format, you're familiar to the committee operation, and you will understand that that this is by no means any slight to you individually, but it just works in terms of the time. We don't know, really. But we're going to start. I'll give each of you a chance to make a statement to the committee.
It may surprise you.
All right. All right. Then I'm going to ask ladies first on the list. So it's Mrs. Marcaprea, then it's Daphne Hunt. So we'll start with Ms. Hunt.
Okay. Thank you. Thanks for the opportunity to speak with you for a few moments today. As a union representing over 96,000 state workers, SEIU Local 1000 is well aware of the need for the state to have stable and sufficient revenue sources. We're also aware that this needs to be done in a carefully vetted and dependable manner. Any tax proposals considered by the legislature matter to us for three main reasons. One is that our members strive to ensure that California provides quality public services. Two is that our members are middle-income California. And the third is that there's a face to the tax system, and it's those workers at BOE and FTB and other revenue-generating departments who know this system, who interact with taxpayers on a daily basis, who educate small businesses and others about their rights and responsibilities, and who have a lot of valuable insight and knowledge to offer when it comes to the implementation and administration of any changes to the system. The need for quality state services does not rise and fall in line with revenue changes. The governor himself acknowledged this in his executive order establishing the commission. The services that the public depends on do indeed need stable, sufficient, reliable, predictable sources of revenue, and changes to the state tax structure may be necessary in order to ensure that. However, to echo many that you've heard from, we have serious concerns about the BNRT, an untested tax model, as a revenue source around which over half of the general fund would depend. The 21st century economy is indeed different than the one in which our current tax structure was developed. We have become increasingly reliant on services and have a sales tax that doesn't reflect that. The legislature could examine an extension of the current sales tax to selected services. This approach contrasts to that of the BNRT, which applies a tax to almost all products and services that would arguably be passed on to consumers, from everything from child care to pharmaceuticals to food and more. By considering a broadening of the state sales tax base to select services alongside a lowering of that sales tax rate, the legislature could carefully adjust our current tax system to today's economy instead of just throwing out two robust tax sources, the corporation tax and the state general purposes sales tax, for the untested, unvetted BNRT. SEIU Local 1000's members are not just employees providing vital state services, they are a cross-section of middle-income California. As such, they deserve a tax system that is fair and transparent. The current proposal to flatten the personal income tax is not fair. You've heard the average effects by AGI brackets by now. I just want to speak to state workers for a moment. So if we look at these averages, an office technician who makes $32,000 a year would see a $3 cut in their personal income taxes, while someone making over $200,000 would see on average $2,300. And of course, we've talked about those folks who make over $1 million would see $109,000 on average. Aside from this unfair distribution of cuts, consider the negative impacts that doing away with certain tax credits would have. 2 married state workers, a staff services analyst and an office technician with an annual income of $70,000 and 2 children could see an increase in their tax payment under the Commission's new plan. A single office technician earning $38,000 a year who rents and has 2 children could actually wind up paying hundreds more as she sees her renter's credit go away and the child care expenses credit. The changes considered and adopted by the state must not disproportionately advantage California's wealthy while placing greater burden on lower and middle income families. Redressing volatility should not be a guise for giving the wealthy greater tax breaks, and instituting reform should not be an excuse for adopting greater regressivity. Also, with regards to the fairness of the tax system, we would encourage the legislature to look at repealing certain corporate tax loopholes and demanding increased disclosure from corporations, thereby increasing the transparency of the system. We'd also like to take this opportunity for a moment to highlight for the committee the important work that state workers and revenue-generating departments like BOE and FTB and others do. We represent a wide variety of workers who help bring money into the state. Auditors who analyze personal income and corporate tax returns, compliance representatives who help close the state tax gap by researching, tracking down, and collecting taxes owed the state, business tax representatives who educate small businesses and other taxpayers on their rights and responsibilities, tax technicians who help facilitate taxpayers paying their taxes on time, and many more. These state employees, the public face of the state tax system, are a valuable resource regarding implementation and administration of any changes to the tax system. Last year, for example, the union met with almost 200 compliance representatives from BOE from around the state and produced a report for the Board of Equalization on how to enhance collections. Some of the suggestions put forward in this report were adopted by the board. Another suggestion raised by these workers was to better coordinate tax dispute activities, and we would encourage the legislature to study this idea.
Well, we haven't really had any testimony on that. I think next Wednesday we'll invite FTB and BOE to talk about enforcement and compliance and how and what they envisioned. I mean, the one issue was raised, for instance, by BOE relative to the fact that the sales tax, state portion of sales tax would be eliminated, but not the local, and that shifts significantly cost to the locals to the tune of, I don't know, $200-300 million. Not an impediment. But there's issues. I'd like to hear what what the cost would be or what the issues would be for compliance and enforcement on this new tax.
Well, since the Commission issued its report, we've had the opportunity to meet with some workers from BOE and FTB, and for example, and it sounds like you'll talk about this at greater length in the future, but one issue raised by compliance reps at BOE is that you still have to collect the local and district portions, and there's actually fear that this may wind up increasing the percentage of the tax gap, because as businesses who are inclined to not pay what is now a smaller sales tax, BOE has to, and the workers there have to make the decision about how much do we invest in collecting what is now a smaller amount. So while the amount we expect to come in from sales tax may decrease, we could see the tax gap increase as it just becomes less feasible to go after collecting those smaller amounts. And FTB workers raised concerns about the implementation and administration of the BNRT, changes to personal income tax, interaction of that with federal standards. So to sum up, Local 1000 is encouraged by the Commission's and the legislature's efforts to take an honest and careful look at the tax structure, what is and isn't working, and how do we implement changes to have a healthier state budget. And we're also very encouraged to hear that you're not just considering and critiquing those proposals put forward by the Commission, but also going to seriously consider alternatives like the ones I raised here, like oil severance tax, split roll property taxation. Because the bottom line is that Californians deserve a reliable revenue stream to provide them with quality public services, and they deserve a tax system that is fair and transparent. So thank you for letting me come and speak.
Thank you very much. Any questions? All right, we'll go to Ms. Peelsticker.
I was fourth on the list.
Right, but you're the second woman, the second lady in the ladies first.
Okay, Michelle Peelsticker, California Taxpayers Association. While I do applaud the goals of the Commission to look at the state's fiscal structure, I think that the Commission's directive, as you, Mr. Chair, pointed out, toward addressing the tax structure or the volatility in the tax structure as opposed to looking at the entire fiscal structure as a whole, was inappropriate. And I don't use that term in a pejorative sense, but just to say that it's more appropriately considered a spending issue as opposed to a tax issue. I associate my remarks with those of Mr. Mitkey insofar as I also had an example prepared where someone makes a large amount of income in 1 year and doesn't make anything for a couple more years and then makes a large amount of income in the next year. They don't change their line of employment. They save that money to get them through the lean years. It wouldn't make a lot of sense for someone who makes, let's say, $10 million every 3 years to go to let's say they become an electrician because the income stream is more steady, albeit smaller. That wouldn't make a lot of sense for an individual, and it certainly doesn't make a lot of sense